Welcome to the European Market Open. A minute to go until the start of cash equity trading. I'm Tom McKenzie in London alongside Francine Lacroix. And here are your top stories. Weaponizing energy. Russia cuts gas supplies to Poland and Bulgaria. Gas prices soar. The euro hits a 5-year low. Banks, and more banks. Deutsche Bank and Commerzbank beat as Credit Suisse posts a bigger loss than forecast. Plus, big tech, big divergence. Alphabet tumbles on disappointing ad sales as Microsoft jumps on robust cloud demand.
Now, Tom, let's take a look at the futures. And it's all about a divergence in terms of corporate stories. Of course, if you look at the Euro Stoxx 50 and the DAX are kind of fluctuating. So we still have COVID concerns in China. We have the Fed. And then the corporate results are really mixed. So you look at tech, price to perfection, they're down, but others beating estimates.
There was
expectations, estimates. You like that?
I like the convergence of both of those.
Estimates.
That kind of marks what we're doing and what we're seeing today, because there's a lot that these markets have to work through. You saw some pronounced losses on Wall Street yesterday. NASDAQ down more than 4%. The S&P 500 down more than 2%. The NASDAQ now year to date lower by around 20%. And we continue to watch that space, of course, in an environment of higher yields. You had President Xi Jinping in China coming out and saying there needs to be an all-out effort on infrastructure. That seems to be his response to the slowing growth picture in that country amid COVID-0 and lockdowns. The FTSE 100 currently gaining 0.1%. The CAC 40 is also up 0.2%, about 12 points. The Spanish IBEX is currently lower by about 0.1%. We continue, of course, to keep an eye on all the earnings that are coming thick and fast. We'll bring you some executive interviews with the likes of Credit Suisse and Deutsche Bank coming up, as well as we see how that reads across and sets us up for the quarters ahead. In terms of the other markets that we're watching, the futures, of course, after a grim day on Wall Street, we'll see how things are squaring up. Again, with the geopolitics and the acknowledgement that this step by Russia to cut Poland and Bulgaria off is being considered a major step, of course, implications significant for the likes of Germany and Italy, as well as they try to shore up their energy supplies. The S&P futures stateside pointing to gains of 0.6%, so making up for some of the heavy losses that we saw yesterday. The CSI 300, wanted to draw your attention to this because you've seen some solid gains on the back of those comments from the Chinese President Xi Jinping, currently up 3%. The US 2-year yield, that came off significantly yesterday, was a significant move into US Treasuries, currently at 258, up 10 basis points. So a big pickup in terms of the yields today, just very volatile across the Treasury space just in the last 24 hours or so. And European natural gas futures, of course, we wanted to highlight this as well, given what we're seeing from that decision by Russia to cut off Poland and Bulgaria, currently up 12%. We'll be speaking to Lundin Energy about this space, what the implications are more broadly for Europe's energy space. Francine?
Yeah, the energy space really left, right, and center. So let's dig deeper into the sectors. Finally, Russia, going on with its threat and saying, you don't pay in rubles, you don't get the gas. The European Union so far has said, look, we can't pay in gas because it's not what the contract says, but then what does it mean? Do we go to energy rationing? And so that is what's also playing out on the markets today on these individual stocks. If you look at basic resource technology, but also chemicals, media, healthcare, they're on the way up. Of course, it's all about rationing, and so it's the ones that will probably be at the bottom of the list if the government decides, right, you can have some energy, you need to wait, and so you can't go into production. And we have telecom, insurance, real estate, travel and leisure on the way down. But overall, it's a bit of a mixed bag when it comes to earnings, Tom.
It is indeed. And we're talking about the banking sector, of course, a bigger than expected loss in the quarter for Credit Suisse. Those liabilities continue to weigh on the Swiss lender. A different picture for Deutsche Bank, but you're seeing losses nonetheless of around 3%, just over 3% for the German lender, which actually beat on the top line, helped by trading in sales, particularly around the fixed income part of the business. So that was central to more positive earnings for Deutsche Bank. Nonetheless, the shares are down 3.4%. GlaxoSmithKline, they of course face the activist investor Elliott and pressures there to increase and improve the pipeline. They beat with their earnings for the first quarter. A lot of demand for a shingles vaccine, helping to improve sales at that drug maker. GSK currently up 0.8%. Francine.
Yeah, shingles in Italian, the fire of St. Anthony. So dramatic, those Italians. Now let's get over to Bloomberg MLive managing editor. He is not dramatic, but he has a great pulse on the markets. He's Mark Cudmore. Mark, you're looking at valuations in big tech.
Yes, absolutely, Francine. As we know, the pain in the tech sector in the US has been one of the big themes of this week, of the past few days, and really a big story of this year. So this is a look at the price-earnings ratio of the NASDAQ 100 on a best estimated 12-month rolling basis, 12-month blended basis. And as you can see, it's plummeted to the lowest level in 2 years. I've had a number of people ask me, is this the time to buy bargains? Look how cheap it's got. Surely it's fallen enough. Have we reached a capitulation low? You might look at that when you look at a 2-year chart, but now let's look at this chart on a 10-year basis, and you can see it gives you a very, very different perspective. So here's the exact same chart. Yeah, we've seen an extreme amount of pain, but it was the last 2 years post-pandemic which were their anomaly. You can see that this level is still above most of what we saw in the previous decade before the pandemic, and that's because earlier this week, we talked about financial conditions. The financial conditions post-pandemic with the combination of monetary policy and fiscal policy meant that we saw extremely easy conditions that had never been seen before in history, entirely unprecedented. Now what we're seeing is a little bit of a reversion to the mean. And what's important to remember is that while they've fallen a long way, they have a lot further to fall, because not only is this the more normal environment, but the Fed is tightening financial conditions aggressively, which means we should go to the bottom of this range. The net conclusion is there's a lot more pain to come for the NASDAQ over the many months ahead. I'm not making any view in the next kind of 48 hours or so.
Mark, thank you so much. Mark Cudmore with a big dose of common sense, of course, looking at some of the technology stocks. Now, let's get into the key market drivers with markets editor Christina Kino, as well, Emmanuel Ko, Barclays head of European equity strategy. So thank you both for joining us. Emmanuel, let me actually kick off with you, because we have quite a lot of corporate earnings. We have quite a lot of concern about what European gas, means if a lot of the countries decide not to pay in rubles, and whether we're going to see energy rationing. Does it automatically become more painful for equity stocks from now?
Yeah, good morning. Well, the macro narrative for market is very complex. And in a sense, I think that the macro outlook for Europe is very much hostage of this conflict in Ukraine, right? So as long as the threat of, supply restriction from energy and gas to Europe, or some embargo is here, I think markets will be very nervous about downside risk and ultimately a recession. So some of that seems to be reflected in current positioning, sentiment, and valuation. But this is very much a very fluid situation, and no one seems to be giving it the benefit of the doubt for now.
Emmanuel, I just want to follow up on that. Do you start to see a repricing of some of these equities around the possibility of the likes of Germany and Italy being cut off?
Yeah, I mean, we've seen obviously the broader consumer cyclical space, so core cyclicals, industrials, auto stocks have been sold meaningfully, and I've seen meaningful downside in the last couple of weeks. So it seems to me that the market is somewhat preparing itself for a fairly tricky outlook and somewhat the worst case scenario. So some of the data that we track on positioning, on sentiment, are pretty much record low and imply a lot of negativity already in the price. Now, of course, if you were to see some of this worsening on the conflict front, and indeed, much tighter supply from gas and energy, we can have much more downside to the market. I think a kind of a mild recession might be in the price now, but if you have something much more severe, you can see the market falling more, and maybe more unwind of this or more selling of cyclicals to some extent.
Emmanuel, let's also bring in our markets editor, Christina Kino. Christine, we're just hearing from Gazprom saying, look, the gas transit to Europe via Ukraine is in line with requests around 48.7 MCM a day. Are we going to look at rationing, actually, of industries? And so that would automatically, I imagine, hurt earnings in the next quarter.
Absolutely, Francine. I mean, that is kind of the next risk that markets are trying to get their heads around, really. What does it mean for share prices? What does it mean for the euro? What does it mean for bonds? If we get to that situation where economies have to start rationing their energy supply, the impact, of course, is very, very obvious in commodities, but this has very broad implications across the markets as well. As Emmanuel said, you know, it could be a situation where equity prices are starting to, or could start to factor in that potential hit to the economy. Germany and Italy, of course, quite vulnerable. But more broadly, we're seeing this playing out immediately and imminently in the euro. I think that's probably the most obvious and evident macro play at the moment. That 5-year low really speaks to how Europe as a region is very uniquely exposed to this energy risk from Russia. And I think this is kind of playing out as one of the worst fears, is the idea of Russia cutting off supply of energy to Europe. And that's kind of starting to play out now, and perhaps paving the way for further declines, particularly in the currency.
Emmanuel, let's bring you in on this point on the tech earnings that we've seen. We've been talking about this divergent picture between the likes of Alphabet and Microsoft. Does this open up opportunities?
Yes, I think it does. And as I said, the market is very much focused on the macro outlook and trying to, you know, position for the next risk. But if you look at the current situation, it's not that bad, and earnings are still coming as a support to the market. So we have about 80% of companies beating estimates. Earnings are growing, you know, double digit. So, you know, it's a bit more of a mixed picture, as you would expect 2 years into this recovery. We have some cost issues here and there. We have some sign of demand destruction in some particular end market. But overall, look, earnings are not that bad, and you know, that should come as a support to the market right now. Now, of course, we are seeing much more dispersion, and to some extent, there is a lot of dislocation in the market, you know, because all these different macro narrative, you know, the Fed, China, Russia, are forced investors to, you know, pick and choose and make difference across different type of stocks, etc. But we are now seeing, as you are showing on your screen, we are seeing very different type of reaction depending on earnings, and I still believe that good earnings can be rewarded. And in this more mature phase of the cycle, ultimately, with tighter liquidity in sight, you want to focus on earnings as a key differentiator between what you want to buy and what you want to sell.
Okay, Emmanuel Cor, of course, from Barclays, head of European Equity Strategy. We'll get more on your views on the earnings picture, unpack that in more detail after the break. Bloomberg's Christina Kino, thank you for walking us through some of the key market themes. Coming up, Credit Suisse reports a quarterly loss. Don't miss our interview with the CEO, Thomas Gottstein. That is next. This is Bloomberg.
The Indian city of Jamnagar is a money-making machine for Asia's richest man, Mukesh Ambani. His company Reliance has the world's biggest oil refinery complex here in the city. Jamnagar is also where Ambani is making his newest bet, a $10 billion investment in green energy. His ambition is closely aligned with the Indian government's plan to reach net zero emissions by 2070. But Ambani is not alone. India's second richest man, Gautam Adani, has committed $20 billion of investment over the next decade. But India's massive dependencies on fossil fuels have some environmental advocates questioning the realism and sincerity of those green ambitions and those of its two biggest billionaires.
exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front row, the best seats in the house for business's greatest minds.
Welcome back to The Open, everyone. Let's get to some earnings now. A lot of earnings today. Credit Suisse has reported another quarterly loss as lender struggles with a growing burden of legacy litigation costs. Yes, still, and that continued to batter its reputation. Well, our Manus Cranny spoke to the chief executive, Thomas Gottstein.
It's good to see positive net new assets, but it's not something I'm chomping about because they are still, I would say, at the low level. It's not near our target.
You're not cheering?
I'm not cheering, no, but they're solid, and it's a good reflection that we have strong client franchises across the board in all regions. Actually, Switzerland was very good. Especially our premium clients business, ultra high net worth business was very good. But we also had some solid net new assets in Middle East. So I would say it's a step in the right direction, but quarterly net new assets is not something I'm too focused on anyway. It's more like a mid to long-term metric.
A number of people have said to me that this bank is now very squarely a takeover target. How vulnerable is it, and will you fight to the death to keep that brand independent?
Look, we are very much focused on our strategy, implementing our strategy. This is how we'll create value for our shareholders. If we get back to the 10% ROTE by 2024, which is our target, the share price and the valuation of this bank will go back where it belongs to, and so will this brand.
How do you get back to that return on equity? What is
by implementing our strategy?
One final question in terms of the biggest risk. We see escalation, Russia cutting off gas to parts of Europe in the past 24 hours. Thomas, how do you see the risk from the war in Russia-Ukraine? What is the biggest unintended consequence, the biggest risk for you in markets in your business?
Well, we see it really in all the businesses, whether it's on the investment banking side, where you have much lower capital markets activity, whether it's in wealth management or asset management, where clearly the market downturn resulted in lower assets under management. And so there are primary and secondary effects.
Is that your biggest headwind for this year?
It is a headwind for all of us. I mean, it's not only a Credit Suisse headwind, it's for all of us. But, you know, markets will recover. And so we obviously, firstly, are worried about the people in the Ukraine, and that's what we really care about, and hope that things will stabilize there soon, and then the markets will follow.
Credit Suisse CEO Thomas Gottstein there speaking to our Manus Cranny in Zurich. Still with us is Emmanuel Corp, Barclays Head of European Equity Strategy. Emmanuel, I was just thinking back to the first quarter of this year, at least the first few weeks of this year, I should say, when it's almost consensus that you wanted exposure to financials, but the dynamics have changed. How do you look at the banking sector? How much do you want to be adding, if at all, at this point, and how do you spread that divergence across the sector?
I mean, the reversal in sentiment and performance has been stunning for the banking sector. And look, we do find it attractive at currently. Even we added to the sector a few weeks ago using the dip we had recently as an opportunity. I mean, look, the sector has completely disconnected from bond yields, right? So earlier in the year, yields were the key driver of the banking sector, and now we've seen a complete decoupling simply because the market is focusing on the downside risk, on the economy, on recession risk, and yields are not really seen as a support anymore. But look, from an earnings standpoint, we see that higher rates should help. At the same time, we feel fairly good about balance sheet, about asset quality, and valuation look very compelling now. At the same time, positioning, which was fairly crowded in the start of the year, is now much more cleaner. We've seen a lot of selling on the sector. So risk reward, I would say, compared to maybe other parts of the market, is interesting to us.
Emmanuel, is there anything that you'd be buying right now, given what we've just talked about, all of the geopolitics, all the earnings pressure, and possible energy rationing?
We still like energy, simply because this is something which ticks many boxes in terms of giving us a hedge against this very complex geopolitical situation. I think the oil concerns are not going to go away anytime soon. I still believe, inflation narrative is here to stay as well, and the sector is giving us a mix of relatively good fundamentals, strong earnings upside, cheap valuation, good balance sheet as well. So we very much like energy. We're a bit more nervous about materials given China exposure. We like some of the industrials. We've seen some of the short cycle names delivering good numbers. We think the big picture is very much about investment. We need to have more capex in many parts of the economy, and that's going to be, helping some of the stocks here in the space. We also like, some of the stocks in utilities, which are a bit more defensive. So, at this stage, I think you want to have a bit more of a barbell allocation, but some of the cyclicals look too cheap, have price what seems to be a too aggressive or too negative macro outlook.
Yeah. Emmanuel, thank you so much for all of your insight. Emmanuel Coder, Barclays, head of European equity strategy. Now, the UK and the US say they're seeking to work quickly to tighten trade ties. We'll be speaking to Anne-Marie Trevelyan, the UK Secretary of State for International Trade. That's coming up next, and this is Bloomberg.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
It's a great question.
Great question.
Great question.
Great question.
Great question. That's going to be the best question I get all night.
I'm glad you asked that.
Bloomberg Television. Top experts. Great questions.
Welcome back to the Open. Let's focus in on the UK now. Great Britain and the US say they are seeking to work quickly to tighten trade ties, even as discussions on a free trade accord remain frozen. US Trade Representative Catherine Tai has been holding talks in Scotland with Anne-Marie Trevelyan, the UK's Secretary of State for International Trade, who joins us now. Secretary of State, what progress has been made given the reluctance from the Biden administration to enter formal free trade agreement discussions? What has been moved? What has moved in terms of your talks with Catherine Tai, and where do things go from here?
Well, good morning. We've had some really good discussions over the last 2 days, both in Aberdeen and in London, and a month ago in Baltimore, where I went across to listen with Catherine Tai to stakeholders from across the US on what's important to them to help us grow what is already an extraordinary bilateral trade relationship of over £200 billion a year. We want to be drilling down and understanding where we can, in a modern 21st century way, tackling not only obvious market access barriers, thinking about how we can drive forward the digital trade principles, which we agreed during the UK's G7 presidency last year, how we can support SMEs and those young female entrepreneurs and minority groups who are not yet able to get the maximum benefit of our bilateral trade. So we've been discussing a wide range of areas, hearing from stakeholders UK and US about what's important to them. We've made really great progress, and we've been able to set forward a programme. We're going to put together a roadmap going forward. The first next step of which will be meetings in June to discuss SMEs in more detail.
Secretary, given the Biden administration is still holding back on actually fully negotiating a free trade agreement, what's your global priority? What are the other countries you also want to negotiate with right now?
So at the moment, we are working in detail on our CPTPP accession, a really important market for us, part of our Indo-Pacific tilt that we set forward in our integrated review last year, looks to those enormous and growing markets. We are in discussions, as you'll be aware, because the Prime Minister was there at the weekend, in discussions on how we progress our India free trade agreement. We're also working with a number of other countries, key partners like Canada and Mexico, who are CPTPP partners, but also important trade partners in their own rights, looking to progress those as well, alongside Israel, Switzerland, and another of other countries. We are really keen to build those relationships, liberalise trade, and make sure that the values of free and fair trade that the UK believes in are ones that we can help establish and maintain across the world.
Okay, Secretary of State, as an early proponent of Brexit, what is your message to small businesses across the UK who have lost out in terms of export opportunities in the European market, illustrated in stark terms by the latest study from the LSE?
So some of the many challenges that our fantastic British businesses have had in their exporting in the last couple of years, of course, has in part been through COVID challenges, as well as some of the changes to the rules and regulations that the new framework and the new relationship that the UK has with the EU. Last autumn, I set up our export support service, which is there to help exactly those SMEs who either want to know how to do trade with European countries, or indeed have had an issue that they want to help resolution with. And we've seen a huge amount of use of that in the last month. We've diverted resources to support companies who have issues trading with Ukraine, or indeed challenges through the sanctions we've brought in against Russia and Belarus.
All right, thank you so much for joining us, Anne-Marie Trevelyan. Too short a time, so we'll have to come back to have a lengthy conversation in the studio. We'd very much like that. She's, of course, the UK Secretary of State for International Trade, joining us from the Financial Services Leader Summit as part of City Week. Now, coming up, we speak exclusively to the London Energy Chief Executive. He's Nick Walker. This is a conversation about gas prices after Russia escalating, saying that if they're not paid in rubles, they will cut off supplies. That started with Poland and Bulgaria. Who's next? This is Bloomberg.
estudio, nuestro experimento, no hemos pintado todos los edificios de blanco, sino estos más asequibles de pintar. Y ya hemos detectado reducciones medias en el área metropolitana de 0,8 grados aproximadamente en un periodo de ola de calor y con picos máximos de 4 grados de disminución en un momento puntual del día, en una zona puntual del día. Y como dices, en una ciudad como Barcelona funciona incluso mejor que las zonas verdes, según las modificaciones nos detectan incrementos, o sea, disminuciones de temperaturas mayores con tejados blancos que con incrementos de zonas verdes como tienen planteados el plan director urbanístico.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Welcome back to the Open, everyone. 30 minutes into the European trading day, and here are your top stories. Well, weaponizing energy, Russia cuts gas prices to Poland, gas supplies to Poland and Bulgaria. Gas prices soar. The euro hits a 5-year low. Banks, and more banks. Deutsche Bank and Commerzbank beat. Credit Suisse posted bigger loss than forecast. Plus, big tech, big divergence. Alphabet tumbles on disappointing ad sales as Microsoft jumps on robust cloud demand. So we get through the earnings, Tom. There's like 1,000,001 earnings, just like 1,000,001 Dalmatians. And then we look, of course, at COVID policy in China, and we look, of course, at these gas supplies. What happens if there's no gas going to Germany and Italy if they don't pay in rubles?
And all of those risks are feeding into the market this morning, this Wednesday morning, where you're seeing lower moves, of course, across the benchmark. European stocks are down now by almost 1%. So, of course, as Francine was saying, concerns about that decision by Russia to cut off Poland and Bulgaria, particularly acute now as you shift your focus to the likes of Italy and Germany as to how they respond if they become the next target. The DAX then down at 1.3%, and the FTSE 100 lower by 0.5%. A bit of support coming through because two of the only sectors that remain in green currently, 30 minutes into the session, are energy and basic resources. You did have that commentary from President Xi Jinping around supporting infrastructure, stepping up infrastructure spending. That seems to be his response, his answer to the acute pressures on that economy as a result of the squeezes around COVID-0, the regulatory regime on technology and real estate as well. Let's switch it over and see how things are playing out sector by sector. Earnings, of course, front and center, and a mixed bag when it comes to the bank earnings, but also when it comes to technology, as we said in the headlines, with the likes of Alphabet on one side of the ledger not doing so well, concerns about competitive landscape and also advertising sales. Microsoft, though, cloud services doing very well for that business. Basic resources then up 1.3%. This is on the back of soaring gas prices. Brent is elevated, as is WTI today as well, linked, of course, to that decision by Russia to cut off Poland and Bulgaria. Energy prices, of course, ties into that, up 0.2%. At the bottom of the list, utilities falling more than 2%. Financial services also lower. A mixed picture when it comes to banking, with the likes of Credit Suisse and the legacies around liabilities there continuing to haunt that Swiss lender. Deutsche Bank doing better, but the shares are lower this morning. Francine.
Now, Moscow has cut off the gas supply to Poland and Bulgaria, escalating Russia's energy standoff with Europe. European leaders face a choice now of accepting Putin's demand to pay in rubles or the prospect of energy rationing. Well, going straight to us is a Bloomberg energy reporter, Rachel Morrison. Rachel, so how much pressure could this actually put on European energy markets?
We've seen prices rise strongly this morning on news that gas flows have been cut, as you said. And really, that's coming not so much from the impact for these two countries, but the wider impact and what this could signify. Because we have a series of deadlines for which the contract payments will come in the next few weeks and towards the end of May. We've had Germany, Uniper, the biggest taker of gas from Russia in Germany, saying that their deadline is the end of May. So these two contracts in Poland and Bulgaria both expired. So this was Russia showing that this is what it intends to do if contract deadlines arrive and companies have not paid in rubles. So we're expecting today to see some reaction from the European Union, really from Germany, from Italy, from the Netherlands, as to how they will deal with this situation, whether they will change the approach or whether they will face up to Putin and put in place the emergency plans to deal without Russian gas. Of course, the weather is milder now, but Europe is trying to fill storage ahead of next winter. So there will be an impact if we suddenly see a cut-off in Russian gas supplies, even though the weather isn't cold.
Okay, Bloomberg energy reporter Rachel Morrison, thank you for getting us up to speed on that decision by Vladimir Putin to weaponize gas supplies and what it means, of course, for the European market. We'll stay on this story and look at how, of course, gas prices are shooting up today along with oil. Let's go to an earnings interview that ties into the energy space with Lundin Energy, the company beating estimates for the first quarter in terms of EBITDA. Joining us is Nick Walker, the CEO of Lundin Energy. Nick, we want to get, of course, to the earnings picture, the earnings story and how it positions the company going forward. But let's start with this geopolitical story and the decision by Putin to cut off Poland and Bulgaria. We've focused on the short-term impacts, and we can see that in the pricing today. What are the medium-term impacts of this decision across the energy space?
Well, you know, I think this highlights the importance of universal access to secure, reliable and low-cost energy. And I think it'll, in the long term, put some more realism in the debate about energy security and the energy transition, and a recognition that perhaps hydrocarbons will continue to play an important role in the energy mix in the long term. But I think it'll also accelerate investments in the long term into energy transition, and we're already seeing governments moving in that direction.
Nick, what are you saying? That actually it will take much longer to transition, or will it accelerate? I know you're selling part of your oil exploration, oil and gas exploration, and dependent to someone else. Do you regret now that decision? What does it mean going forward?
No, we don't regret that decision. I think it's a fantastic decision. I mean, the reason we did this is that we've built a great company in Lundin Energy, and we felt to be prosperous through the energy transition, we needed greater scale. And last year we looked around how we can create that, and our combination of our E&P business with Aker BP creates Europe's largest E&P business. That transaction will close at the end of June, and this will be a fantastic business which will deliver long-term shareholder returns. And I think you're seeing that in the share price of both companies already. And what's left over in Lundin Energy is we've kept back our renewables business, and we intend to grow that. And I think that business it's relatively small, but it's in a great position. It's got no debt, and it's got a great position to grow. And I think we'll take advantage of renewable expansion and energy transition opportunities. So I think we're heading in both directions, and it's a great transformation of the business.
Nick, just give us some more details on that, if you could, in terms of that transition, that focus on renewables. What are your ambitions in that space, and how do you plan to make them a reality?
Yeah, well, the business comes out of the gate in great position. Over the last few years, we've built 3 high-quality renewable assets in the Nordics. The business is debt-free, and it'll be generating free cash flow from the end of 2023, and it's got the financial capacity to grow. And we've got a great management team, and we've demonstrated over many years in our business the entrepreneurial capability to go and create something. So we're going to take that business now with a strong leadership team and go and grow a renewable business in the Nordics, and perhaps expanding into the rest of Europe.
So, Nick, what are you working on exactly? I know, and I quote, you have a daring and uncompromising attitude that you've had in oil exploration. What does that mean for renewables? Is it access to raw materials? Do you worry that there's not enough nickel, that there's not enough lithium? And how do you get around those problems?
Well, I don't think those things relate to us. I mean, initially the business is focused on renewables. Currently, we have a hydro project in Norway, and we have 2 wind farms. One that's just come online in Finland, and a second one that's under construction in Sweden. And we intend to continue in that direction with renewables in Europe. I think longer term we'll start to think about in that business whether there's some other energy transition opportunities that the business can take advantage of.
Okay, so Nick, an earnings beat in the first quarter, $1.89 billion, above the estimates. What do you do with that profit increase that you've seen across the business? Do you return cash to shareholders, or are you going to put it to work with acquisitions?
Well, we've set out our dividend policy earlier in the year, and of course, and so that's returning cash to shareholders. It's an increased dividend by 25%, and of course, with the combination of our business with Aker BP that we've talked about, it ends up with a much bigger company, and that company is in a great position to expand shareholder returns over time. And I think, when the transaction completes at the end of June, I think that's a sort of broader question you really need to place to Aker BP. But what I will say is that the joint company is in a fantastic place to grow shareholder returns over the next decade.
Nick, just very briefly before we let you go, is $100 a barrel, is that the new floor for Brent?
I think we're going to see strong prices for some time, and I think we could see above $100 for quite some time.
All right, Nick, thank you so much. Nick Walker there, London Energy Chief Executive Officer. In the meantime, we have the reaction from the Commission and the President, Ursula von der Leyen, to Gazprom cutting off supplies to Poland and Bulgaria. Ms. von der Leyen saying that Gazprom action is unjustified and unacceptable, but she says the EU is and was prepared for this scenario. She says the EU states have put in place a contingency plan, and they are talking and coordinating this at group level meeting right now. I'm not sure whether that means that there's strategic reserves that will be released further, but of course for the moment it seems like all hands on deck to try and mitigate this pretty big escalation in Russia versus EU.
Yeah, and a 21%, almost 22% spike in natural gas futures. That's over the last 5 days. Oil as well being supported as a result of this decision. $106 a barrel for Brent, up 1% in today's session. Coming up, we're going to speak to Mark Reed, CEO of the world's largest advertising agency, WPP. That is next. This is Bloomberg.
When you think of cutting-edge technology at sea, you might be thinking of stuff like this. But there's an incoming revolution on the high seas that isn't quite as sexy, but could be significantly more impactful.
Container shipping is the key component of global trade. About 80 or 90% of all the world's goods are transported at sea at some point.
But there's a significant unseen cost to the modern era of global commerce.
About 3% of all the world's CO2 emissions come from shipping.
3% may not sound like a lot, but that's roughly comparable to the entire CO2 output of Germany. Since reducing trade isn't a likely option, what about a technological improvement to help reduce the emissions from these well-stocked maritime behemoths?
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
welcome back to the Open. 43 minutes into the European trading day this Wednesday morning. It's been a choppy session across the benchmark, currently down 0.3%. Future stateside pointing to gains of 0.4 after some bloodletting across the US equity space yesterday, particularly pronounced on the Nasdaq, which fell around 4%. We're going to get live pictures of SpaceX. This is their latest launch to the International Space Station. They haven't launched yet. That's expected at 52 minutes past the hour. As you can see, the astronauts or members of the crew are strapped in and prepared for that countdown in a little under 10 minutes. This is a SpaceX Crew 4 mission to the ISS, launching from NASA's Kennedy Space Center in Florida. They're going to be going up to the ISS and conducting lab experiments. So we can see those live pictures there. We'll keep across that and bring it back, hopefully, at 52 minutes past the hour for the launch. Francine.
I know, always so exciting. I'm still quite moved like a little kid when I see humans going into space. Now, the world's largest advertising agency, WPP, has raised its guidance for the year. It's seeing strong demand for services, an encouraging sign that brands will actually continue spending after a post-lockdown surge. Well, joining us now is Mark Reed, the chief executive of WPP. Mark, great to have you on the program today. So thank you so much for joining us. You know, I guess advertisers are spending now, but what's your main concern going forward? We have COVID, we have interest rates going higher, we have a war in Europe. What's the one thing you can't control that could be a downer?
Well, I don't think we can necessarily control any of those things, but we did have a good first quarter. You know, our growth was up 9.5% after, strong growth last year on the back of, client wins from companies like Google, Coca-Cola, and even strong demand for services, particularly in digital media, data and technology, e-commerce, and other areas. So our public relations business actually done extremely well in the last quarter as well. So I think there's good demand. We raised our guidance, as you said, and we're still, let's say, mindful of the economic risks coming into the second half of the year. But I guess, as we've learned over the last 2 years, there's many things we can't control. We've been there before, and I think we'll navigate our way through it well over the course of the year.
And Mark, you say, of course, you raise your guidance. Some would say that's a bold call, given all of those risks that Francine has just mapped out. What gives you the confidence that you can meet that guidance, given all of that uncertainty? What kind of conversations are you having with your clients that gives you confidence that spending will continue into the second half of the year?
Yeah, no, I think there's two things. Firstly, we outperformed our own expectations by 3 to 4%, in the first quarter, and effectively we're baking that into our numbers for the year. We're sort of leaving the rest of the year unchanged. And I think unchanged is where we see our clients. We haven't yet seen any, major withdrawals from the market. I think clients are seeking to protect their budgets. We're dealing with an environment of inflation. Clients need to invest more in marketing and brands. In that environment, there's continued investment in digital media and technology and e-commerce. But I mentioned, I think clients are, as far as they can, trying to protect their spend. It's a very different pattern from what we saw sort of exactly 2 years ago today, when they were in the mind of cutting.
Mark, where do your clients actually want to spend their dollars? Is there any traditional advertising that's particularly hot right now, or is it all into the social media platforms?
Well, actually, traditional TV has been pretty strong. I mean, up, I think, 17% in the UK, in the first quarter of the year. So traditional media has been strong. I mean, you saw Google's or Alphabet's results last night. I mean, obviously some disappointment in the market. I wouldn't be disappointed by 23% organic revenue growth. So I think, but don't forget, Alphabet's a third of the global advertising market outside of China. So when you're seeing that strong growth from the world's biggest advertising sales company, there is good demand still, and I think that clients are looking to reach consumers where they are, which are these digital channels. I mean, the Netflix decision is interesting in that context as well, potentially opening up to advertising.
Okay, so maybe Netflix is an opportunity. Maybe you can expand on that. But of course, we can't talk about social media without talking about Twitter and Elon Musk's attempt to buy that company. He said, look, he wants to strip out potentially advertising from Twitter. Would that hit WPP, or do you think it could be a good idea?
Well, I think it'll probably hit Twitter more than it would hit WPP. Twitter's got about $5 billion of revenue, $4.5 billion of that from advertising, and I don't think he's going to pay $44 billion for a company and then effectively eliminate its revenue line. There's no doubt that Twitter can be a stronger product, and many of these ideas, I think, around fake bots and improving the algorithms and improving the customer experience would be great for the platform, great for users and great for our clients. I just saw the SpaceX launch. You'd be a fool to bet against Elon Musk and what he would do with the platform. No doubt some people are concerned about the content on the platform. We'll have to see. I mean, he's been pretty clear that he believes in free speech within the law, and I think that that type of approach, may work. It may not. We'll have to see.
Mark, give us a sense of how your China activity is going, given the very strong COVID zero policy we still have over there.
Look, we had good growth in China actually in the first quarter, but there are lockdowns. I mean, one of our offices in Shanghai everyone was locked in the office for 48 hours over a weekend a few weeks ago with no notice. So these lockdowns are having an impact on our people and on the economy. We'll have to see how this zero COVID policy progresses. I mean, ironically, it takes some of the pressure, doesn't it, off commodity prices with lower demand. China's about 6% of our business, about 8,000 people there. So it's some concern, but I think it's not. It's within the bounds of what we said for the balance of the year.
And Mark, is this an attractive environment to make some acquisitions?
Look, I think prices are still high, despite the tech sell-off. They remain high, and technology, I think, is the area where we'd like to make more acquisitions, things that really differentiate us and build our expertise there. We want to invest really in the future. So it's attractive. We bought a really strong business in Village Marketing that specializes in influencer marketing in the US. Actually, they work with clients like Netflix and Amazon, helping them build influencer marketing programs. So there's tremendous innovation in the advertising business. And I think that's the thing, really to focus on. Good demand, a lot of innovation. With Elon Musk, Jeff Bezos, Mark Benioff, all investing in media assets, some traditional, some digital. It's not going to be a boring year. I think we can take that.
Yeah, you got that right, Mark. It's not going to be boring. Mark Reed, they're the chief executive of WPP, and there seems to be a link between billionaires who buy media and also go into space. This is where we go now, space, SpaceX, and we're looking at live pictures. I'm quite excited because there are 4 astronauts on board. This is for a 6-month stint, 3 NASA, and an Italian astronaut. And they're being sent to the International Space Station. Of course, the launch sparks the beginning of a 6-month stay on board the ISS, part of the commitment of SpaceX to NASA to periodically fly astronauts to and from the orbiting labs. It's a little bit different to what we've seen in the past SpaceX do.
As if Elon Musk didn't have enough on his plate. He has to monitor this launch as well. And of course, SpaceX has been very, very successful, particularly around the reusing of their rockets. Let's bring in Alex Webb from QuickTake, who's been across all of this and knows the workings of SpaceX and Elon Musk's portfolio in great detail. And a question that you flagged to us, Alex, is around whether or not SpaceX could potentially benefit from some of the fallout around Ukraine and the Russians maybe stopping their services to the ISS for NASA.
Since the shuttles stopped running, Challenger was, of course, all those shuttles ceased supplying the International Space Station. NASA has depended upon largely Russian rockets, on the Soyuz program, to take its astronauts into space. Increasingly, we're seeing SpaceX take that over, but there have been some whisperings, and sometimes quite loud whisperings, from Russia that it may cease carrying those astronauts into space. And therefore, it could be a benefit in the medium to long term for SpaceX, that if they can't go through Russia, then Elon has the solution for them.
Alex, I remember, one of my favorite episodes of Leaders was actually with a French astronaut that just came back and, was telling us about his experience in space. I mean, this is, on board this flight, there are 2 very experienced flyers, and then there's 2 rookies, if we'd like to call them that, 2 NASA astronauts, Jessica Watkins and Bob Hines. And Jessica Watkins is also making history with her flight. She'll be the first Black woman to live as a long-term crew member on the space station. What do these kind of launches mean? Is this a battle, between NASA and Europe on who does it next? Is this going to be like the next frontier for world dominance?
The thing that is fascinating about that kind of question, actually, is that over much of the past 30 years, that hasn't been the case. The International Space Station has been a really great example of international collaboration. We see European astronauts there, we see Russian astronauts or cosmonauts there, and of course we see those from the US. And the thing that is perhaps slightly worrying at the moment is maybe there is a pivot happening. For instance, another company that, is that we're seeing the launch there? Taking
Alex, just talk us through what the process is with launches like this as we watch this happening live.
Well, I mean, a lot of it actually is run remotely. It's run from a control room. The guys on the ship, they have very little role to play. They're sort of hitched along for the ride. Of course, if something goes badly wrong, then they have something to do. But a lot of this is run from a control room, of course, famously in Texas. So actually what we're seeing here is some astronauts holding on and hoping that everything goes to plan.
Okay, so controls from Texas. We continue to see these live pictures. Of course, this is the SpaceX Crew 4 mission to the International Space Station from the launch complex at NASA's Kennedy Space Center in Florida. The launch, of course, successful, and they are heading to the ISS. Of course, another string in the bow for Elon Musk, and SpaceX has really taken the lead on this when it comes to private space exploration and the tie-up, importantly, with the US government, Francine.
I'm just finding it amazing to hear, what the astronauts are hearing, because of course it's open talkback. And so you can hear the Space Kennedy Center speaking to their own astronauts. Yeah. This mission called Crew 4, SpaceX's fourth operational human spaceflight mission to the ISS for NASA. So you can hear the commentary, actually, and I guess the emotion that goes with the crew, not only flying to space, but also the people on the ground. As it seems, for the moment, to be a successful launch. SpaceX actually launched its first crew to the ISS on the company's Crew Dragon back in 2020. And I remember, I think it was on this program that we were looking at, because timings usually work for a number of reasons. And since it's been getting in a pretty steady rhythm with followed-up crewed missions ever since. I still find it amazing. I know it's 2022, but look at it. It's just amazing.
And Alex, the Falcon 9, so at what process, it's going to land back, isn't it, on one of these landing pads in the ocean, called a shortfall of gravitas. I mean, Elon Musk is never unimaginative with the naming of his drone ships.
And it's, that is the thing that has fundamentally changed the economics of going to space. It used to be that if you were sending satellites into space, you'd often use Indian rockets because they were very, very cheap compared to the rest of what the world offered. SpaceX has really undercut that. And actually, the thing that I was just about to say when we're thinking about maybe some of the tensions internationally is that OneWeb, the British company that launches satellites, it had planned to send some of those satellites into space with Roscosmos, with the Russian NASA equivalent, on the Soyuz rocket. Russia said, we're only going to do that if UK sells its stake in OneWeb and you guarantee that these satellites won't be used to spy on Russia. So actually now they're using SpaceX to send those satellites up there, not clearly on this particular mission, on another one, but that does speak to some of the rising tensions that we are increasingly seeing when it comes to space exploration. Not quite the level it was in the 1960s, but perhaps that's the concern that is the direction of travel.
The geopolitics of space as we continue to watch this live launch, and we haven't even touched on China and their ambitions. Alex Webb, excellent insights from Bloomberg's Quick Take. Francine.
Now that's it for the European Market Open. Surveillance Early Edition is up next. We'll, of course, continue watching the SpaceX launch. We'll have a full roundup of all of the market news you need to know. We'll also really focus on what's happening between Russia, Poland, and Bulgaria. This is after this morning Gazprom said it would stop sending gas. What does it mean for Germany and Italy? Will they also decide not to pay in rubles? That conversation is up next, and this is Bloomberg.
When you think space, you probably think
One space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
But ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. And the place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
First quarter was clearly impacted by a couple of one-offs, including number one, our 700 million legal provision.
We're sticking with the revenue outlook for the full year that we provided back in March of 26 to 27 billion euros. That's growth on last year and well ahead of where the market consensus is.
In terms of revenues, the most direct impact is the fact that we suspended the vast majority of our commercial activities in Russia. About 1% of Google revenues were from Russia.
This is Bloomberg Surveillance, Early Edition, with Francine Lacqua.
Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Here's what's coming up on today's program. Weaponizing energy. Russia cuts gas supplies to Poland and Bulgaria. Gas prices soar. The euro hits a 5-year low. Banks, and more banks. Deutsche Bank and Commerzbank beat. Credit Suisse posted bigger loss than forecast. Plus, big tech, big divergence. Alphabet tumbles on disappointing ad sales as Microsoft jumps on robust cloud demand. Now, first thing is first, so as always, let's check in on the markets because the movement gives us a good indication of where people still see a risk-off mood or whether they're quite buoyant because of some of the corporate news. So first of all, the European stock 600 gaining some 0.1%. It is very clear that we've had a lot of earnings and it's a bit of a mixed bag when it comes to corporate earnings. Some of them better than expected, others worse than expected, and some of the better than expected see their share prices falling because they disappointed investors on higher valuations. The Credit Suisse also shedding more executives, and that's having an implication for a lot of the banks. Technology stocks, now they got a beating yesterday, certainly in the U.S., now pretty much unchanged. Dollar, always a good idea to look at dollar, 1,238. So we're choosing the U.S. dollar index, not the pair, and then we're looking at Bitcoin just under 40,000. The other currency that we really need to look out for is, of course, yuan and some of the pressures there. Now, if you look at the individual map or the individual countries of the European map, I find this maybe, without a doubt, the story of the day because we see Russia and Gazprom today saying that we'll cut off gas supply to Poland and Bulgaria. What does it mean for this country, extremely reliant on Russian gas? What does it mean for Italy? What does it mean for Germany? You can see this stock, the index, actually, FTSE MIB, down to 0.3%, the DAX pretty much flat. So Moscow has, as we're saying, cut off the gas supply to Poland and Bulgaria, escalating Russia's energy standoff with Europe. European leaders face a choice now of either accepting Putin's demand to pay in rubles or actually face a prospect of energy rationing. Well, the euro is sinking to a 5-year low on the news. Joining us now is our Western Europe managing editor, Chad Thomas. He's in Berlin, and our energy reporter, Rachel Morrison. So thank you both for joining us. First of all, Rachel, how much pressure could this put on European energy markets?
Yes, as you say, gas prices have risen quite sharply this morning on the news. And really what that's coming from is the wider impact, what this could mean for other countries. So these are the first two countries which have had payment deadlines on contracts since Putin's demand for ruble payments. And over the next month, we're going to see those deadlines for payments arrive for other countries, for the bigger importers like Germany, Italy, the Netherlands. And so really that's what the market is looking at, the risk of further supply cuts to other countries. And Germany, we're hearing that that would be a lot more significant for overall gas supply for the country, but also for Europe. And this is all coming at the same time as Europe is trying to refill gas storage ahead of next winter. So even though the weather is milder and it's not winter, this is still going to have an impact for prices as companies and countries rush to try and fill storage.
So, Chad, talk to me a little bit. I mean, if you're Germany today, if you're Italy today, you have to decide on whether you pay in rubles or face energy rationing. What kind of decision, what kind of thinking are they putting in place, and what conclusion do you think they'll actually end up with?
Well, Francine, we haven't heard very much from Germany, from Italy, from the EU at this point. Certainly, they are behind closed doors assessing the situation at this moment. All eyes certainly on Germany. They are the biggest gas importer in the region from Russia, and we will be hearing from the German government this afternoon. They have a number of events scheduled where ministers responsible for these topics will be speaking, so they certainly will be asked on it. Germany has said in the past they will not pay in rubles, so it seems hard to believe that they're going to change their mind on this. As Rachel was saying, the next payments in Germany are coming due in May, and so it really is a question then at this point whether Germany takes some action here or they wait to see what Russia does. But it seems unlikely that Germany would change its stance at this point, and they maybe will take matters into their own hands given what we've seen transpire overnight.
Yeah, we're also getting some breaking news, Chad, BASF to wind down most remaining activities in Russia and Belarus. Chad, what can you tell us about, the comments from the Commission President Ursula von der Leyen? She was saying that first they find this outrageous, the fact that they cut the supplies, but they also have contingency plans, and now they're looking at, I guess, alternative sources of energy. What is she talking about? Could it be a stockpile release, or is it actually trying to get, some of the fuel from other parts of the world?
It's potentially a little bit of both, Francine. They obviously have been preparing across the European Union for this to potentially happen. And so we know, for example, here in Germany that they have been stockpiling their reserves. They have been speaking to other potential partners where they can get both gas and oil. There is an EU meeting happening today where they're talking about the next round of sanctions actually on Russia. Let's see what impetus the news from overnight gives to those discussions, but certainly they have been preparing for something like this to transpire, and now that it is happening, we'll have to wait and see what exactly the actions are that they decide to take.
Great. Thank you so much for joining us. Our Western Europe managing editor, Chad Thomas, and our energy reporter, Rachel Morrison. Now joining us to talk about the markets, gas supplies, and cutting them off is Fiona Frick, Unigestion Chief Executive. Fiona, thank you for joining us. And in the studio, what a treat. There's so much going on. As soon as you wake up and you see Russia blocking gas to Poland and Bulgaria, does it mean that this is a new normal, that we'll have to find alternative sources? And will it really hurt a lot of the companies in the next earnings season?
I think it's a new normal that will continue. Obviously, transition to other sources of energy than gas coming from Russia or oil coming from Russia is something which is already planned. And if you look at Paris COP alignment 2050, so I think this will accelerate on the medium term. It creates, however, volatility on the short term for countries which are very dependent on these countries, for gas, for Russia, obviously, as you said, for Germany and Italy. And the question there, you see that there is a revival of some coal energy, which are more brown energy, in the meantime, to cope with that stress.
So what does it mean actually for your investments? You have portfolios. Do you get out of, I mean, if we're looking at rationing energy, and I know we talk about it as if, we're going to the park and pick up tulips, but this is a huge deal. It means that, parts of the economy could be left without energy.
Yeah. So what it means, obviously, is that inflation is back, obviously, not only because of energy, but also because of food. And therefore, we have to adapt our portfolio to an inflation environment. It means that we believe still in equities, but more in defensive equity, quality equities, perhaps less growth, tech-oriented equity, which is a bit of a reversal versus last year. So because we have to take into account that we are in a world where obviously energy prices are going to stay high for quite a while. There are other commodities which are quite high, inflation which are numbers which we have never seen, central policy that are becoming that will become more restrictive in monetary policy, less fiscal policy. So a portfolio which is more defensive than I would say that last year.
Okay. Is there anything that you find particularly attractive right now that other parts of the markets have not looked at? I don't know whether there's an asset class or actually just going to bonds because of this inflationary pressure on yields across the curve.
So obviously we won't go to bonds because with an inflation at 7 and bond yield at around 3 for the 10 years.
But they're going up. Slowly, but they're going up.
So we still prefer inflation asset classes like equity. But equity, we have to be quite specific to take your exposure in companies that will be able to price in this inflation on the consumer, because if not, the margin will get squeezed.
Which is not toothpaste, it's probably luxury.
It can be pharmaceutical, it can be some stable sectors where whatever happens, you need to buy them.
And of course, you can't have that, too much exposure to China, given we think that they will continue with this COVID zero policy. So does that really restrict the number of companies that you have at your disposal?
I think, it restricts the company you have at your disposal. I think the problem with China COVID is not only the problem for China, it's a problem for all the economy, because obviously it puts some disruption in the production chain for a lot of companies, so we have to be careful for that also. And some of the earnings that went out yesterday highlighted that, the impact of the COVID in China.
Fiona, thank you so much. Fiona Frick from Unigestion stays with us. We have plenty more questions to ask, including maybe crypto or not, whether that's a hedge against inflation. Coming up, we hear from Credit Suisse Chief Executive after another quarterly loss for the bank. That's coming up next, and this is Bloomberg.
About what they call black soot caused by the manufacturing and consumption of these fuel products in the illegal refineries.
Oil theft, known as bunkering, and the refining of its spoils is worsening the damage from decades of fossil fuel exploitation, creating one of the world's most severe ecological disasters.
Our sacred forests, our homes have to give way to oil wells, and no one gets much benefit.
Imagine a resident of Port Harcourt who inhales this soot every second in 24 hours, 7 days a week, 30 days in the month, and for years now, we are dying slowly but surely, and our lifespan is reducing every day.
it's good to see positive net new assets, but it's not something I'm jumping about because they are still, I would say, at the low level. It's not near our target.
You're not cheering?
I'm not cheering, no, but they're solid, and it's a good reflection that we have strong client franchises across the board in all regions. Actually, Switzerland was very good. Especially our premium clients business, ultra high net worth business was very good, but we also had some solid net new assets in Middle East. So I would say it's a step in the right direction, but quarterly net new assets is not something I'm too focused on anyway. It's more like a mid to long-term metric.
A number of people have said to me that this bank is now very squarely a takeover target. How vulnerable is it, and will you fight to the death to keep that brand independent?
Look, we are very much focused on our strategy, implementing our strategy. This is how we'll create value for our shareholders. If we get back to the 10% ROTE by 2024, which is our target, the share price and the valuation of this bank will go back where it belongs to, and so will this brand.
How do you get back to that return on equity? What is
by implementing our strategy?
One final question in terms of the biggest risk. We see escalation, Russia cutting off gas to parts of Europe in the past 24 hours. Thomas, how do you see the risk from the war in Russia-Ukraine? What is the biggest unintended consequence, the biggest risk for you in markets, in your business?
Well, we see it really in all the businesses, whether it's on the investment banking side, where you have much lower capital markets activity, whether it's in wealth management or asset management, where clearly the market downturn resulted in lower assets under management. And so there are primary and secondary effects.
Is that your biggest headwind for this year?
It is a headwind for all of us. I mean, it's not only a Credit Suisse headwind, it's for all of us. But, markets will recover. And so we obviously, firstly, are worried about the people in the Ukraine, and that's what we really care about, and hope that things will stabilize there soon, and then the markets will follow.
The Credit Suisse Chief Executive there, Thomas Gottstein, speaking to our very own Manus Krani in Zurich. Manus joins us now. I guess, Manus, the concern is that he keeps on going back to the strategy, and the strategy could be good, but people are really focusing on these legal costs, and they just keep on rising with no real end in sight.
And there is no real end in sight, and I challenged him on that. The second loss in a row. You promised us a year ago a clean set of numbers in 2021, and yet there is more revisitation of these provisions. He used the word transition. People are tiring of the word transition in the inflation narrative, and indeed in the Credit Suisse environment. If you look at the gutting off the top level again, the CFO out. He is gone after 10 years. The CEO of APAC is moving aside, and we have new Edwin Lowe stepping in. The chief legal counsel goes after 10 years, Romeo Cerruti. He has gutted this bank, some would say, of the risk takers and of the historical people in the business. He is still there. He was around during Greensill. He was there during Archegos. There's no doubt about it. This is still a bank in transition. No sign of any capital return. And Francine, when it comes to downscaling, UBS did well in the investment bank yesterday. It bolstered them. Rates did well to bolster UBS. Neither of those things come to pass at Credit Suisse. You're looking at fixed income down 50%, equity sales down 50%. This certainly is a bank that is in a tough, transitory environment. Francine.
Manus, thank you so much. A really fantastic interview with our Manus Krani and Thomas Gottstein. I enjoyed immensely listening to it. Now let's get back to Fiona Frick from Unigestion. Fiona, we made a nice chart for you. It's a Frick kind of chart, and it's looking at euro and the fact that euro could be looking at parity on this gas flow escalation. Again, does this change kind of everything? We do have the chart. We will bring it up. There it is. But as if by magic. I mean, what does it mean if we do touch parity?
It means that the market is seeing that euro is not it's not in a very good position, because obviously it has inflation, and the central bank policy has less leeway than in the US, for example, because the growth is not as strong as in the US, and the unemployment rate is not as strong as in the US. So obviously when you look at the European situation and the US situation, which both have to struggle with growth coming down and inflation coming up, US is much more better positioned than Europe.
So why hold any European stocks at all?
Obviously, the thing is, when you hold the stocks, it can be denominated in Europe, or it can be denominated in dollar. In fact, what you have to see is where is the production done and when is the consumer done. So you can have a Roche company or a Nestlé company, although they are based in Switzerland, they are not neither Swiss, neither European, they are global companies.
Is there, how do you position for a policy mistake? And I know it's extremely difficult, but if you believe that actually central banks and the Fed are really behind the curve, again, what does it mean for how you want to protect yourself?
So obviously we think that policy mistake is the biggest risk because central banks are quite behind the curve. Last year they were speaking about transitory inflation and now they are recognizing that it is structural and the pace of going up in terms of rate has accelerated quite dramatically. So obviously the accident from central bank is a risk which is quite important. Obviously we don't go in bond market, we stay allocated to equity and we try to be in sectors which are not too sensitive to duration.
Such as, I mean, again, it's healthcare and some, I guess, the ones that have pricing power.
Defensive stocks, less technology stocks, not highly.
Crypto? Is there anything that you do with crypto right now?
I think crypto, it's interesting because for some of our clients, which are typically family offices and high wealth individual, it's starting to be a diversification assets. The idea being that the long-term bond market has been quite manipulated by all the buyouts that has been done by the Fed and the other central banks. So the idea that crypto are not correlated to bonds and that can be a sort of digital gold. So it is starting to get a place in portfolio in an asset allocation as a diversification asset.
Fiona, talk to me a little bit about what's priced in, you think, in terms of a possible oil embargo or a gas embargo right now between Europe and Russia. If we could be in a week looking at all supplies being cut off between the two countries, or I'm thinking of Germany and Russia or Italy and Russia. Will the market really reprice because of that, or are they already starting to look at that possibility?
I would say that the market hasn't totally repriced. I think the market has priced inflation, and when you look at break-evens and things like that, the market has not really priced a recession yet. And the problem with yield coming up and growth coming down, obviously, equity can be at other level of valuation that they are today. And if there is this crisis of energy that continues to accelerate, and then Germany has been quite clear what it would cost to cut gas to Germany, it will have an impact on growth, and therefore it will have an impact on equity.
Thank you so much, Fiona Frick there, Unigestion Chief Executive Officer, with some of the insights on what she wants to do with her portfolios. Now, coming up, we'll take a closer look at the implications of Russia's move to cut off gas supplies to Poland and Bulgaria. This is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Economics, finance, politics. This is Bloomberg Surveillance, early edition of Francine Lacquet here in London. Now let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. Russia's Gazprom says it has cut off gas to Poland and Bulgaria in a major escalation in the energy standoff with Europe. Moscow is making good on a threat to halt natural gas flows to countries that refuse to pay in rubles, which the European Union has refused to do. Now, China is set to step up infrastructure investment following a meeting chaired by President Xi Jinping. Meanwhile, satellite images show China's lockdowns have crippled construction and port activity to levels below the first COVID outbreak in 2020. And the World Bank is extending $600 million to Sri Lanka in financial assistance to help address the economic crisis. The country's presidential office says the aid will be delivered in 2 phases. It will help the country meet health, agricultural, food, security and gas needs. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thank you so much. Big piece of news because there was so much concern out there, or so much anger, I would say, amongst traders about the LME and how they handled the nickel situation. The LME Chief Executive Matthew Chamberlain will remain in his permanent role. I don't know whether we'll see possible litigation from some of the companies and some of the trading houses that got their, of course, trades annulled because of what happened with nickel. But certainly it's not means that the problems go away. Coming up, soaring energy inflation and now imported food prices. We discuss that next. This is Bloomberg.
Energy prices and a short supply of key chemicals that produce synthetic fertilizers are sending pig, cow and horse manure prices soaring. Even human waste is in demand as farmers hunt for alternatives. Fertilizer helps increase crop yields.
You can see how much moisture is held into this. It's a lot of organic material into the compost, so it breaks down. The manure and the straw breaks down into a friable mix that can be mixed into your soil in the ground and for growing a whole range of different vegetables. Holds the nutrients in, holds the water in, and it really increases the the kind of biodynamic profile of the soil.
The recent price spike could mean more farmers going organic for the long term.
Lots happening on Wall Street.
It's the basic law of economics.
It validated what the market was already pricing.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
It's a challenging dynamic. We could continue to see that kind of strength.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
However you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
The fastest renewable takes, what, 2, 3, 4 years, I imagine, and we're talking about Russia cutting off gas supplies today.
No, sure. And actually what we're finding, we actually have an onshore wind model called the Fan Club, which is basically wind turbines located close to consumers, and as the wind blows, it means that they can get almost as much as 50% of their electricity. Now, we see that combining community support, relaxing some of the red tape that we have here in the UK, we could actually be building these turbines in under a year.
And then they would be fully operational, like
they would
shortly
be fully
afterwards?
operational. They're single turbines, close to consumption. They could be built very, very quickly, and also reducing consumers' energy bills as a result.
And there's enough wind. I mean, I know this. I mean, this is like a flippant comment, but actually, I was shocked.
Yeah.
You know, I've lived in the UK almost all of my life. We're used to the wind, so it's unclear why we had a problem in 2020.
Yeah, look, I mean, renewables are intermittent. The sun doesn't always shine and the wind doesn't always blow. But what we really should be doing is focusing on building as much clean electrons as we possibly can for the UK population, and then using gas or perhaps other sources like nuclear very much as fill as well, you know, when those times happen. And then actually long-term look at electrifying, and we look at things like electric vehicles and the ability that they will have to store electricity, for instance, into the future. I think by 2030 we're predicting there will be 11 million on the road, and actually we only need 10 million to make sure that we balance ourselves on a kind of peak day in using electricity here in the UK.
What about water? I mean, being an island, you know, how much of a contribution can the water, hydrogen, and things like that do to the renewable space?
Yeah, I think hugely. You know, the offshore wind program here has been something over the last decade, which has been nothing short of incredible. We're now a world leader in UK wind power, and that's because there was really clear direction from government, which brought the investment in, and also has driven the innovation for us to be able to build that. So we need to now do the same for things like floating offshore, and then of course green hydrogen as well. Green hydrogen for heavy industry could be something that's really important.
Is there enough commitment for, you know, from the government to get this done, or is there a setback because, you know, there's I guess not distractions, but they're worried about foreign policy and things like that, and so maybe it's not getting the support it should?
Yeah, I think really yes. I think the energy security strategy that we saw published 2 weeks ago, it outlined a really great green net zero future for the UK. I think probably what it maybe could have more of is prioritisation. So things that really are going to impact customers quickly. So we should be prioritising the things that we can build the quickest and in the cleanest ways.
Do you worry about a shortage of any kind? So, you know, a lot of these renewables will need lithium, it'll be a nickel. If there's a global race to be much more renewable and cut off that dependency from Russia, who has priority?
Yeah, and I think, I mean, I'm not really an expert in the supply chain, but I think what we see is that, again, if we start to prioritise the things that are really important, because I think at the moment, perhaps our strategy is very wide, and it really doesn't give indicators over what should come first. And it's about actually focusing in on those things and being able to deliver the things quickly that we can do.
Great. Thank you so much for all of the update. Soiza Northbound there, the Chief Executive Officer of Octopus Energy Generation. Now, coming up, Google's parent company Alphabet reports first quarter sales falling just short of estimates. We break down the numbers next. This is Bloomberg.
My wife's like, I feel like we're locking them up.
Diverging fortunes. One of those, and we only had one.
I think it's a great idea. I mean, she can go away and make a cup of tea and, like, you know.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm France Lagua here in London. Now let's get back to earnings news. Deutsche Bank has posted a better than expected first quarter profit as investment banking revenues rose, but it warned that Russia's invasion of Ukraine could also hurt full year results. Well, the chief financial officer, James von Moltke, spoke to our Danny Berger about the economic outlook.
For the economy, there are other effects out there. Of course, the supply chain disruptions, the lingering effects of COVID, including lockdowns in China, and naturally high energy prices that actually existed prior to the war effects. All of those, I think, are having an impact on the economy and business confidence. And we also stand in front of what will be a relatively historic rate rise cycle that's beginning in the United States.
Well, that was the Deutsche Bank Chief Financial Officer, James von Moltke. Now, let's also return to tech earnings. Google's parent company, Alphabet, reported first quarter sales that just fell short of estimates. Meanwhile, Microsoft's cloud growth propelled quarterly sales ahead of the street's forecast. So joining us now is Laura Wright with all of the latest. So, Laura, if you did good, you did really good. If you did badly, you're getting slammed today.
That's right, and we're seeing diverging fortunes in pre-market trading. Microsoft in the green based on that revenue beat, and Alphabet selling off. Well, if we start with what happened in Alphabet, YouTube, the dream that YouTube is a real driver and engine of growth going forward, that was shattered. A miss of $500 million on revenue for this quarter, landing below $7 billion. The reasons for this, a couple really. That QuickTake is what the platform that Gen Z are using right now. YouTube failing to catch up in spite of launching and seeing growth in their Shorts platform. Now, another competitor for YouTube also is, back to you, Francine.
All right, I think Laura's just having a little bit of issues, and then we'll get back to Laura for a full analysis of tech. Now, let's broaden out the reach. We're bringing in Bloomberg Quick Takes Alex Webb with all of the latest on Google, Microsoft. We're going to talk balance sheets. It's going to be so much fun. We're going to have TikTok. All right, so if you're doing well, it's great, but actually there's a huge divergence between the winners and the losers.
Absolutely, and it really shows actually the distinction between Google's business and Microsoft, that Google is still fundamentally an ad tech company. It derives most of its revenue and then by inference most of its profit from advertising. So if there's even the slightest wrinkle, given the levels at which it's trading, then it starts to get punished by investors. It has been trying to get into the cloud business. It is the third biggest cloud provider in the world, behind Microsoft and Amazon. But it is a big gap between the second and third place, and it's been suffering from failing to get into that as quickly as it could.
Right, so who's the biggest winner? If you look at some of the things, I mean, are we just all going after content on TikTok, and it means that, you know, a company like Meta will just have to spend so many dollars in there?
There are a couple of different moving parts here with advertising. I know you had Mark Reed on earlier. He was saying that, look, they are still growing apace. It's just that they are feeling more, it's not quite as untrammeled as it used to be. That as economies start to tighten, the first things that companies who need to keep a close eye on their budgets, the first thing they cut is usually their marketing spend. You tie that with the difficulty that Google and Facebook are increasingly having to be able to target their ads, and that is because of Apple. What Apple has done is really crack down on data sharing between apps. It used to be the case that you could easily track people, see what they were doing, what was driving spending. It's getting harder. That makes it harder for Google and Facebook to demonstrate their value.
But Alex, so do a lot of the companies, because of COVID and lockdown, do a lot of companies, do they hang on to that spending that they would have done on advertising? So even if we see a downturn, even if we see a recession, they still have that cash to spend that they don't want to deploy anywhere else.
So they are cash-rich companies. What we're seeing with Facebook in particular, it's spending a lot of money, of course, to get into the metaverse, but it's also spending on its core products, on Instagram and on the Blue app, Facebook itself, in order to try and offset the competition from TikTok. It's trying to innovate in those core spaces. Google is doing the same. They talked about it yesterday. YouTube has its Shorts business, which is almost a direct copy of what TikTok does. So it is trying to innovate as well. It has so much money, it's hard to know
if it's spending it correctly and if it's making the massive bets, for example, that Microsoft is doing by buying Activision.
Okay, I need to ask about Twitter because A, it's a great story. Two, it involves Elon Musk. I mean, is he really going to spend $44 billion and then not have advertisers? This was a point that Mark Reed of WPP was saying.
It seems highly unlikely. One thing that has been posited is almost doing the inverse of what Netflix does, right? So Netflix was a paid tier. It is going to extend into advertising. Well, Twitter is an advertising-based business. Maybe it extends into a paid tier, and if you pay for that tier, you don't get ads. There's a benefit to that. You can get more predictable cash flows, but your upside is limited. That Facebook makes something like $250 a year per user in the US from selling ads.
Yeah.
The sky's the limit, in theory. If you're only charging $5, $10 a month, the likelihood of being able to charge $20 a month to use Twitter is pretty unlikely.
Do you see the ads? I mean, I know I have the ads, but I don't even see them anymore. I have, like, no idea what's scrolling.
Which is part of their problem. That, like,
I'm the problem, yes.
A lot of the sophisticating advertising on Twitter is they place videos in your feed, which are from third parties. They might be from news organizations, and they sponsor those videos. That's some of the more sophisticated advertising that's happening there.
Yeah, the problem is that you don't see it. Maybe it's subliminal. You see it without realizing.
Well, Facebook would often make the case that actually TV advertising was ineffective because during the ad breaks, people are looking at their phones and looking at Facebook. You can still hear an ad, though, on TV.
Yeah, so it's always coming in. Alex, thank you so much. Alex Webb there with a little bit of advertising psyche as well. From Bloomberg Quick Take. Now let's get straight to your Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. Credit Suisse has reported a bigger than expected loss and parted ways with 3 senior executives. This as a Zurich-based bank warns that the full damage from one of the most turbulent periods in its history is still to be accounted for. The lender's quarterly net loss was driven by legal expenses as well as a charge related to Russian exposure. Now, Bloomberg has learned that Mattel has held talks with at least 2 private equity firms about a possible buyout. That would give the maker of Barbie and Hot Wheels a chance to grow in private hands. The talks with Apollo Global Management and Alcatratron are said to be in the early stages. Lael Brainard has been confirmed as Federal Reserve Vice Chair in a 52-43 Senate vote. She is the first of the 4 central bank nominees, including Chair Jerome Powell, set for consideration by the chamber. She won over Republicans on the Banking Committee after her confirmation hearing, though most GOP senators still oppose her because of her views on regulation. And a study suggests Brexit-related trade barriers have driven a 6% increase in UK food prices. Researchers at the LSE's Centre for Economic Performance says inflation for food products Britain tends to import from the EU, like fresh pork, tomatoes and jam, was more pronounced than things like tuna and exotic fruits that come from other nations. The study covered 2 years to the end of 2021 and attempted to strip out the effect of the pandemic. The world's richest person can't afford too many days like yesterday. Elon Musk's stake in Tesla plunged by more than $32 billion. Investors assessed his deal to buy Twitter and gave their verdict by sending shares of Tesla down 12%. Musk has pledged some of his Tesla stake to secure that Twitter deal. And that's your Bloomberg Business Flash. Francine.
Leanne, thanks so much. Coming up, we get back to the markets as the euro falls for a 5-year low amid threats to energy supplies from Russia. If we look at parity, what does that mean for a lot of the earnings results? We'll dig deeper with our markets editor. This is Bloomberg.
companies now, they're getting hundreds, maybe even thousands of applications. So software has come in to automate the process.
You want to write your resume for robots, not for humans. The only job your resume has is to be comprehensible to the software that is reading it, because that software or robot is going to decide whether or not a human ever gets their eyes on it.
These things are programmed by a certain segment of the population that might not be totally inclusive or not be fully aware.
Concerns about how this technology could exacerbate discrimination. For the FTC, I think foremost, the FTC needs to be making sure that we're fully understanding this technology.
We don't trust companies to self-regulate when it comes to pollution. We don't trust them to self-regulate when it comes to workplace comp. Why on earth would we trust them to self-regulate AI?
Market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
We see it really in all the businesses, whether it's on the investment banking side, where you have much lower capital markets activity, whether it's in wealth management or asset management, where clearly the market downturn resulted in lower assets under management, and so there are primary and secondary effects. See positive net new assets, but it's not something I'm jumping about because they are still, I would say, at the low level. It's not near our target.
You're not cheering?
I'm not cheering, no, but they're solid, and it's a good reflection that we have strong client franchises across the board in all regions.
Well, that was the Credit Suisse Chief Executive Thomas Gottstein talking about the risks of the war in Ukraine and the outlook for the bank. Shares trading lower today. Now, in the last couple of minutes, we also have, of course, our biggest news, if I'm frank, is the fact that Gazprom, belonging to Russia, said it would halt gas flows to Poland and Bulgaria, and that they will keep the supplies actually switched off for the two countries until they agree to wield into Moscow's demands to pay for the fuel in rubles. And just minutes ago, it's the Austrian Chancellor, Mr. Karl Nehammer, commenting on these gas payments on Twitter, saying that Austria will continue to pay for Russian gas in euros. Of course, the other main questions, will France do the same? Will Italy and Germany do the same? And if they don't, and if we see those supplies cut, what does it mean for a rationing of energy? What sectors do they close down? And overall, what does it mean for security of supplies going forward? So let's get into these key market drivers with our market editor, Christine Aquino. Christine, good morning. First of all, to you. I mean, I'm a little bit surprised that we're talking about a possible oil embargo, certainly a gas embargo, because this is escalating. It was a pretty brutal escalation, and I just don't see, I could be wrong, but I just don't see now Italy and Germany turning around and saying, hey guys, we're just kidding, I'm going to pay in euros. So if we're looking at a gas embargo, what does it mean for the markets?
Well, Francine, very bad things, probably, and I think that is what investors are trying to wrap their heads around at the moment, just the sheer impact of this, because this is not only something that will impact, of course, commodity markets, which will be the very obvious and the very imminent sort of impact, but really across markets as well. I mean, it will be quite a hit to sentiment in terms of just investors, you know, having to suddenly think about what would rationing mean for certain sectors of the economy. Will they have to, as you say, shut down certain sectors and prioritize which ones are the most important? So that could have very big implications for certain industries.
But they're not priced in. It's not priced in, which is why I don't really understand. I know we'll look at Europe parity in a second, but why are the markets not sitting up and taking notice of this today? Why are they waiting for, you know, tomorrow or the day after.
Well, Francine, this is classic markets just really being bad at pricing geopolitical risk. I think, it's probably the investor psyche that once we saw this escalation from Russia, the response from the rest of the European countries would be one that would be guided by rational thought, and I think that is the optimism eternally built into markets, and investors assuming that things will get resolved eventually.
Yeah, I guess the worry, or maybe there's hope that there's some kind of stockpile release that, in the short term will benefit us. Okay, we had a lot of earnings. I can't remember, like 300 companies reported earnings, and it's a little bit of a mixed bag.
Absolutely, Francine. And of course, the ones garnering the most attention, of course, are the biggest ones, all the FANG sector companies that have reported. And I think this really just kind of brings us again to that discussion of, is tech still too expensive at this point, right? We've seen very...
Well, it's expensive for sure.
Exactly, yes. But how much more is it going to come down and cheapen up before it's actually a worthy buy? This is, I think, the question that a lot of investors are asking right now. And, various measures we've seen really come down, right? The PE ratio in the FANG stock specifically, that has really closed its gap with the broader S&P to the least in years, I think, since FANGs have existed in their current form. But there are still other expectations that are still too lofty probably and have room to come down.
And then the banks. So I feel like they've swapped roles. So there's Deutsche Bank actually beating estimates, and Credit Suisse, they just cannot get away from these legal costs, and there's no real end in sight.
Absolutely. And there are really a lot of kind of idiosyncratic stories for certain banks, like Credit Suisse you mentioned, that are facing these costs. But it seems like largely the picture is one of cautious optimism, shall we say, because, let's face it, the trading turmoil of 1Q has been quite a boon for a lot of these banks. Trading revenues you could really see reflecting just how much money has changed hands and how much the banks have benefited from that. But then on the other hand, there is a good bit of caution built into their future outlooks beyond 1Q, talking everything from China-related risks, and we heard again from the Credit Suisse CEO talking about Russia-related risks. And so they are still very much looking at this geopolitical risk, what that means for business moving forward.
But you could see a situation where actually, so we have a gas embargo, we have inflation expectations, going higher, really quite out of control, then monetary policy having to follow, and so yields kind of going crazy.
Absolutely. And we are seeing that now in the bond market. We saw 3 sessions of really big bond gains, and we were thinking, this might have been, we've seen the peak of yields finally past us, investors piling back into bonds. But today, the story is very, very different. It focuses back on inflation, and bond yields are reflecting that.
Yeah, and euro parity? What? Let's all go shopping elsewhere in the States. Christina Aquino, there are markets editor. Bloomberg Surveillance Early Edition continues in the next hour. Matt Miller and Kay Lyons are in New York. Anna Edwards here in London. They'll talk about, of course, these gas flows. They'll talk about bond yields, COVID in China, and monetary policy. This is Bloomberg.
That it's highly transmissible. We know that 2 doses of vaccines, Pfizer vaccine specifically, neutralize the virus, but not as efficiently, because various studies showing that reduction up to 40-fold, meaning that a 3rd dose is a must for it to successfully neutralize the variant. What we don't know is still that what are the effects of mix and matching between vaccines and what are the capabilities of antibodies produced from this mix and matching in neutralizing Omicron. Because as we know, many parts of the world use different types of vaccines. And that would be a great data to look at. It will be also great to look at, because majority of the studies done uses a small sample number, and most of the time when you translate it to real world, the data changes. So it will be really good to look at large-scale data of the ability of antibodies from vaccines to neutralize this variant. Grateful here today that the virus, Omicron variant, still uses ACE2 receptor as its main entry. It means that all of the vaccines which are designed with spike in mind still works. Imagine if it uses a different receptor other than ACE2. None of the vaccines would work today. So I think that is the best news that we got from all these studies which came recently, the past couple of days.
Stocked early enough all these precious materials you were just mentioning, and we were on the lucky side that our prognosis was spot on in a way, forecasting what kind of material we would need and what quantity we would need.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
What's happening now is such a supply chain shock that you're having this inflation come through.
There's still quite a bit of momentum in the U.S. economy. So when I think we discuss this growth scare, it's really more a story for 2023.
I think the playing field is much more level now, active relative to passive.
But more importantly right now is the corporate earnings. And corporate earnings so far have been very reliable, very strong.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards, Matt Miller, and Kaylee Lines.
It's 10 a.m. in London, 5 a.m. in New York, and 5 p.m. in Hong Kong on this Wednesday, April 27th. Our top stories today. Google parent Alphabet comes up short in its first quarter revenue, while Microsoft does better than expected thanks to the cloud. We'll hear from Facebook parent Meta after the bell. A bigger loss than expected for Credit Suisse. Deutsche Bank raises the outlook for its investment bank, but costs weigh on the stock. And Moscow makes good on its threat. Russia cuts off natural gas to Poland and Bulgaria. European gas prices surge more than 20% as governments on the continent wonder who is next. Welcome to Bloomberg Surveillance Early Edition. I'm Anna Edwards, live in London with Kriti Gupta and Kaylee Lines in New York. Matt Miller is off today. And Kaylee, it really is the gas story that is dominating a lot of the conversation amidst the earnings here in Europe. But I know tech earnings front and center over in the United States.
Yeah, it's tech in the U.S., energy in Europe, and in Asia, still all about China and the growth outlook there given the COVID-0 policy. What was interesting is you actually saw most Asian stocks lower on the day. The MSCI Asia Pacific Index actually falling to its lowest level since mid-2020, down about 1%. But the bucker of that trend was actually Chinese equities. The CSI 300 rising almost 3%. That is after Xi Jinping came out, talked about more infrastructure spending to shore up the economy. So that actually led to a really big move in industrial stocks in China in particular. They were up about 6%. What's interesting, though, is while you see some positive sentiment finally coming back into Chinese equities, it is not translating into the South Korean won. Actually, the weakest Asian currency against the dollar today, weaker by more than 1% at its lowest level since 2020, around 1265 or so. The concern there being slower growth in China means slower exports from South Korea, and that could weigh on growth. Finally, elsewhere in FX, your big outperformer on the day is the Aussie dollar. It is stronger by about 0.5% or so at around 71 cents to the US dollar. Kriti, that is after higher than expected inflation. Traders are betting on an RBA hike next week.
Yeah, well, Kaylee, what's really kind of interesting to me here is what we're seeing in futures, because I think this
assumption coming into at least the pre-market session, at least here in the States, was it would be a risk-off day driven by those less than great tech earnings that we saw after the bell yesterday. But take a look at this. Futures actually up 0.9%, and you're actually seeing this kind of risk-on mood across the asset classes. 10-year yield up at 276, up 4 basis points. A similar story even in crude, up only 0.7%. Not a huge move for oil markets, but still in the green. Even Bitcoin up 2.3%. And this really tells you here the story of simply this risk-on move. And I wonder how much of this is simply a bounce back from the almost 3% losses that we saw yesterday, of course, driven by tech. Is this something that's priced in? We're going to hit it throughout the rest of the hour. Anna.
Yeah, absolutely. That is the context of what we're seeing here today. The big losses we saw on Wall Street yesterday. Europe actually did represent a lot of what you were suspecting there, Chrissy, that real risk-off tone at the start of trade. The first half hour of our trading day here in Europe was dominated by moves lower for European equities on concerns about what this Russian gas move, cutting off supplies to Poland and to Bulgaria, what that would mean for other European countries. Would there be others that would be next? And on that note, we just saw a statement from Russia coming through that says 4 European gas buyers have actually set up accounts to pay in rubles, or to enable them to pay in rubles should they wish to. So we'll monitor that story with interest. This is what happened to natural gas prices at the start of the European trading day, or at least jumping 20% at the start, pairing those gains, but still elevated, still up by 3.7%. The euro also being caught up in this. We did have we do still have a 105 handle. We've been volatile on the euro dollar through the morning session here. So 105.96 is where we trade on the euro. Weight being applied to the euro as a result of concerns around growth. Germany in particular, questions about what would happen to the German economy if we did see Russia make a similar move there. It's not doing that right now. It would be a concern to companies like Mercedes-Benz Group if it were to see a block on Russian imports of gas. 65.21 is where the Mercedes share price trades. This is what happens when you are positive about your ability to pass on costs to consumers in this earnings season, up by 3.7% as a result of that on the Mercedes share price. The mix, they're trying to move more towards that luxury end as well, and that is benefiting the way that their results are being received. Deutsche Bank, they try to upgrade guidance, or they have on certain parts of the business, but it is fear around costs, and in particular compensation costs, that is weighing on that stock. Let's have a look at Russian assets. There is a lot to talk about when it comes to Russia today, and of course a big focus is around the ruble. Russia wants to see energy paid for in rubles, certainly gas, and that's why they focused on Poland and Bulgaria, because money had become due. Money is not due from the German buyers of this gas until May, but that's where the focus will switch. We'll continue to focus on this story as we go through the next month or so then, Kaylee.
Absolutely, Anna. That's over the next month, but let's talk about what else we're going to get on this Wednesday. No surprise, there is a lot going on. At 10:30 a.m. New York time, we're going to get the weekly EIA oil inventory report. Then from fossil fuels to clean energy, top climate leaders will be convening at the Bloomberg Green Summit to create solutions and drive actions that will shape the future of our planet. At today's summit, we'll be hearing from the White House climate advisor Gina McCarthy, TPG's Jim Coulter, among others. And of course, more earnings on deck, big tech earnings in particular. Facebook's parent Meta will be reporting after the bell, Creedy.
Yeah, Haley, let's stick with that big tech earnings themes, because after the bell yesterday, we got mixed results from mega caps Microsoft and Alphabet reporting, once again, like I said, post-market yesterday, are muddling the picture for the sector. The NASDAQ 100 index falling to its lowest level in more than a year yesterday. Let's get more on those reports with Bloomberg's Laura Wright. Laura.
Thanks, Critty. Well, diverging fortunes in the pre-market, reflecting what we saw after the bell yesterday for Microsoft and Alphabet. Azure Cloud, bumper growth number for Microsoft, up 46% year over year. That was even higher than what the CFO, Amy Hood, had forecast. Microsoft Azure is second in terms of market share, behind only Amazon's AWS for the cloud infrastructure business. Now, to the Microsoft 365 on the commercial and consumer side, growth was robust there. Remember that Microsoft acquired LinkedIn back in 2016, and a strong jobs market means that LinkedIn growth was up 34% year over year. Gaming revenue strong also. Xbox hardware up 14% year over year, an improvement in supply chain congestion, and more of us are out there gaming in spite of the fact economies have reopened. Now, YouTube, that was devastating really for Alphabet. A miss of $500 million in advertising revenue for the quarter, landing at just below $7 billion. A number of headwinds were in play here. Competition from TikTok, that's where the Gen Z kids are these days, and those Apple privacy changes that we've discussed discussed, it makes targeted advertising more difficult, and therefore it makes platforms like YouTube less monetizable.
So, Laura, that's the story when it comes to earnings. We are, of course, all watching whether Elon Musk is or is not going to get his hands on Twitter. Of course, they've come to a deal, but whether it happens is another question, and a lot more detail coming out.
Yeah, a lot more detailed factors in play. A $1 billion breakup fee if either party is to walk away from the deal. You could argue that's more of a risk for Elon Musk because there are still questions around that $21 billion equity commitment. Also, no disparaging tweets about Twitter itself or any employees. Elon Musk is no stranger to saying nasty things about other people on the platform. Only on Sunday, he was trashing Bill Gates. And this risk about Tesla collateral, that Elon's wealth is tied up in. Just yesterday, Tesla closing down 12%. Elon Musk lost $32 billion of wealth because of that, and overall the electric vehicle maker losing more market cap than BMW and Mercedes-Benz combined. What would Matt Miller say if he were here?
I think we can all gander a guess. Thank you so much to Bloomberg's Laura Wright. Now let's turn to European earnings. Two of Europe's biggest banks reported earlier on. Traders at Deutsche Bank outperformed their peers on Wall Street, while over at Credit Suisse it reported another quarterly loss as the lender struggles with a growing burden of legacy litigation costs that continue to batter its reputation. Bloomberg's Manus Cranny spoke to the Credit Suisse CEO, Thomas Gottstein.
It's good to see positive net new assets, but it's not something I'm jumping about because they are still, I would say, at the low level. It's not near our target.
You're not cheering?
I'm not cheering, no, but they're solid, and it's a good reflection that we have strong client franchises across the board in all regions.
Bloomberg's Manus Cranny joins us now from Zurich. So, Manus, this is Credit Suisse's second quarterly loss in a row, a major restructuring in leadership. How significant are those personal changes and also the numbers?
I think the lead here is, there's three things that you can focus on: transition, transition, transition. And again, this time last year, he promised a clean slate. He didn't deliver it, and that's where the doubt creeps in from the market: losses, provisions, and transition. The three major scalps to go. I mean, he's gutted this board. You've got the CFO out. He's been there since 2010. The CEO of APAC, he's moving aside, and Edwin Lowe steps up. And the chief legal counsel, Romeo Cerruti, there for 10 years. Many of these people were there during the Greensill, during Archegos, during the other major provision moments. So too was Gottstein, but he's still standing. So these three scalps are gone. This is part of the transition narrative and the de-risking narrative that is at play from Gottstein. In terms of the actual businesses, again, deleveraging in Asia. Credit Suisse is supposed to be a full-scale investment bank. The investment bank, trading down, fixed income down 50%, equity sales down 50%. Rates, interest rates in your world, in the dollar world, they're only going to add $150 million, nowhere near the $1 billion that UBS were able to tell me about yesterday. This was a CEO who is standing firm. He's got rid of everybody now. The question for me is, will the institutions and the major shareholders back Gottstein to revive the fortunes of Credit Suisse?
Manus, thank you very much. Bloomberg's Manus Cranny live for us in Zurich, bringing us that interview. Let's pivot to one of our other big themes. Moscow has cut off the gas supply to Poland and Bulgaria, escalating Russia's energy standoff with Europe. European leaders face the choice of accepting Putin's demand to pay in rubles or the prospect of energy rationing. Let's get more with Stephen Stachynski, who is a Bloomberg energy reporter in Singapore. And this, of course, raises questions about the rest of Europe, doesn't it? Stephen, I'm seeing now a red headline across the Bloomberg says Germany is meeting now with EU partners on gas supplies. A lot of people focus now on Germany, and what if they're next?
Absolutely. So we saw prices rise for European gas as much as 24% earlier today because of the risk. Russia crossed that line where they cut off gas supplies to Poland and Bulgaria. While they are small buyers, they did cross a line, and people thought, okay, well, this could potentially expand to Germany. But so far, we haven't seen whether Germany will be paying the way that Russia wants them to. We saw signals last week that there might be a way to do it. But right now, gas is still flowing, and prices paired those gains, and they're back down from the earlier highs. But the big focus now will be, okay, how will Germany pay? How will Austria pay? And how will the other big buyers figure out a way to procure that gas? And if the gas keeps flowing, then the gains that we saw in recent days might start to fall a bit, and the worries in Europe might recede. The big thing is if Russian gas does get cut off to Germany, that will have a huge impact on their economy, and they might have to even ration gas, and they could fall into a recession. That's what's in stake, and that's why everyone is watching very closely what Germany says in the next day.
Bloomberg, Stephen Stapczynski, excuse me, thank you so much for joining us. We appreciate it. Let's move over to what's going on in D.C. The Senate has voted to confirm Lael Brainard as vice chair of the Federal Reserve. Meanwhile, a combination of COVID-related absences and a political spat threatens to delay 3 other Fed nominees. Anne-Marie Hordern, our Bloomberg Washington correspondent, joins us now in D.C. Anne-Marie, give us the latest.
Well, we have Lael Brainard, now governor, to now the vice chair at the Fed. And this comes at a time when obviously inflation is a key concern for the White House because it's top of mind of voters ahead of the midterm elections. And when Lael Brainard was nominated, she had said she was going to put working families first. And that means getting inflation down at a time when people are focused on their jobs and how far their paychecks will go. Leaving her to the side now, there's really a lot of drama about the remaining Fed picks. And it's not drama about whether or not they're going to be confirmed or not. But given the fact that, Kriti, as you said, you have 2 senators as well as the vice president having COVID-19, that means the Democrats do not have the votes right now to move forward on Lisa Cook. Then there became a bit of a political spat between Senator Sherrod Brown and Toomey about what to do in terms of Philip Jefferson and Jay Powell. So potentially we might not get the remainder votes this week. They hang a bit in the balance, but potentially next week. And then, of course, what you really want to also focus on is what's going to be coming up next, which is the hearing for Michael Barr and how he does, because remember, that is the nomination that the president had to now go back and get a second person because his first pick basically had to resign due to that hearing.
All right, Bloomberg's Anne-Marie Hordern in Washington for us. Thank you so much. Now let's get back to the market and take a look at some stocks moving in pre-market trading here in the U.S. A big outperformer is Mattel, the toy maker. There's reports overnight that it is looking at a potential takeover of itself. That's according to the Wall Street Journal, potentially Apollo Global coming in for that one, up 13% before the bell. Another stock moving higher is Visa. This is after it also reported earnings after the bell. A lot of people are out spending with their plastic. It was up about spending volumes up about 17%, that leading the stock higher by about 5% before the bell. One disappointer on the earnings front, though, is Texas Instruments. It had to cut its revenue outlook by around 10%, so below street expectations due to the situation in China. The COVID-0 policy hampering production for this chip maker. That stock down around 3% in early hours, Anna.
Coming up on the program then, Kaylee, Freya Beamish joins us, head of macro research at TS Lombard. How does she pull together all the threads we're seeing? Concern around growth in China, the interest rate story out of the US, gas prices and gas supply here in Europe. We'll also talk tech with Rob Niaz, who joins us, a former Google product manager who's now a partner at Hoxton Ventures. Stay tuned for that conversation around what we have learned this week so far around tech. Plus, be sure to check today's big take story on Elon Musk's $44 billion bet on the future of free speech. Read all about that at NI Big Take on your Bloomberg terminal. This is Bloomberg.
city of Jamnagar is a money-making machine for Asia's richest man, Mukesh Ambani. His company Reliance has the world's biggest oil refinery complex here in the city. Jamnagar is also where Ambani is making his newest bet, a $10 billion investment in green energy. His ambition is closely aligned with the Indian government's plan to reach net zero emissions by 2070. But Ambani is not alone. India's second richest man, Gautam Adani, has committed $20 billion of investment over the next decade. But India's massive dependencies on fossil fuels have some environmental advocates questioning the realism and sincerity of those green ambitions and those of its two biggest billionaires.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Earnings season is here.
A moment of multiple crises.
Bloomberg is fastest with the numbers and analysis.
You do have some good news and bad news.
It's a good time to own volatility.
Bloomberg, the fastest numbers and analysis you trust.
This is Bloomberg Surveillance Early Edition. I'm Kriti Gupta with Kaylee Lyons in New York and Anna Edwards in London. Matt Miller is off today. Let's talk about tech because, of course, we got some disappointing earnings after the bell yesterday, something that arguably was coming in, the expectation in the markets priced in perhaps going into those results. This morning, you are seeing futures rebound a little bit for the NASDAQ, but this is really the chart I want to show you. For our radio audience, stick with me. The NASDAQ 100, remember that tech-heavy NASDAQ, year-to-date dropping a whopping 21% if you round up. That's actually more than what you saw in the depths of the 2020 crash in March of 2020, the onslaught of the pandemic, where we saw a lot of that increased volatility, down 19.8% back then. So this is really important because you're starting to see some of that defensive inflation hedge role that tech was playing kind of dissipate a little bit. A lot of these growth fears actually reflected in tech because at the end of the day, the likes of Apple, Microsoft, even Alphabet, these are all companies that are actually exposed to the economic cycle. Sure, they're a little better positioned to weather the storm, but still extremely exposed to that growth story. So as we look at more of those growth fears, tech is something we're going to come back to. But let's talk about why futures are rebounding today in particular. Noor Al-Ali from the Bloomberg Markets Live team, she joins us now. Noor, let me put that question to you. What do you make of this rebound this morning?
I think that's a very temporary rebound because we are looking at fundamentals that overall don't support growth stocks. We are seeing a bit of a rotation into value. Yes, this morning is definitely a good morning for stocks. It wasn't so earlier in the European session. But what I'm more particularly interested about is basically how the long duration equity play is really playing out in ARK, and that's the innovation ETF for Cathie Wood. And you have seen, in fact, that the net asset value for that ETF is at the lowest since April 2020, and you've basically seen it, pare back all of the pandemic gains that we've seen in the last year, and that just shows you perhaps we are now entering into a new dynamic of thinking. I mean, value stocks have historically underperformed growth in the last 15 years. We're talking about since the financial crisis. Yeah. Now it seems that large fund managers are reallocating those funds, and those moves will tend to perhaps be a lot stickier. So I don't expect that rebound in stocks to last.
Right, yeah, interesting to see the real world fight back against the tech theme, Noor. In geopolitics, that's the thing that dominates here in Europe today, around gas prices and what Russia is doing in the gas markets. The euro is weighed down by that, had a 105 handle earlier on this morning. How weak does the euro get on this then, Noor?
Yeah, absolutely. And now it's trading at 106. Look, I mean, that's definitely, a couple of weeks ago, or, when Russia began its assault or offense on Ukraine, we saw it really play out in gold. You saw gold react to the minutes of what's happening. Now you see that in the euro, and it's quite interesting to see how the euro prices that. You're seeing a lot of risk. I mean, there's definitely some path to parity is opening up for the euro dollar for sure. And, it's tested the 5-year low. Now we're going at something going a lot further, and it's on track to close below its 2-decade-long monthly uptrend. It's a bit of a struggle here for the euro because it hasn't been worth less than $1 since late 2002. And such a move was seen incredibly unlikely before Russia's invasion.
Yeah, I'll be back to thinking about piracy. Noor Al-Ali, thank you very much, of our Bloomberg Markets Live team. And for more market analysis, check out the Markets Live blog, MLIV Go. That is the function to use on your terminal. This is Bloomberg.
When you think of cutting-edge technology at sea, you might be thinking of stuff like this. But there's an incoming revolution on the high seas that isn't quite as sexy, but could be significantly more impactful.
Container shipping is the key component of global trade. About 80 or 90% of all the world's goods are transported at sea at some point.
But there's a significant unseen cost to the modern era of global commerce.
About 3% of all the world's CO2 emissions come from shipping.
3% may not sound like a lot, but that's roughly comparable to the entire CO2 output of Germany. Since reducing trade isn't a likely option, what about a technological improvement to help reduce the emissions from these well-stocked maritime behemoths?
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Now keeping you up to date with news from around the world, here's the first word. China's President Xi Jinping is calling for an all-out effort to boost infrastructure construction. It's Beijing's latest attempt to rescue economic growth, but it may prove less effective this time around because of COVID lockdowns. Speaking of, Norway is tops when it comes to normalizing life alongside the coronavirus, while Hong Kong and mainland China are among the worst. That's according to the Bloomberg COVID resilience ranking for April. The U.S. fell 6 spots to number 23, the U.K. down to number 12, both due to the number of fatalities. Coming up, Rob Miaz, a former Google product manager who's now a partner at Hoxton Ventures, will talk to us about big tech earnings. We have Meta due after the bell. This is Bloomberg.
end of the year, but Bali is still quiet and empty. I am here in Kuta Legian, one of the main walking streets here that is used to be a tourist spot for beach, dining, shopping, but many shops here are still closed. Most of the outlets are either for rent or for sale as they have run out of business.
Saya kerjanya di sini udah lama, udah ada 10 tahunan di sini kerja. Masih sepi sih, nggak kayak dulu. Kalau dulu kan rame, sekarang ya ada, 1-2 itu ada. Tapi nggak kayak dulu, kalau dulu rame sekali. Sekarang paling dapat jualan ya 100, 120 gitu, 200 ya. Kalau dulu sih ya nyampe dah 1 juta, 1,5 itu nyampe dapat jualan. Bisa sampai 2 juta dulu. Sekarang nggak pernah lagi dapat segitu. Sama aja, belum ada turis ke Bali. Masih ya domestik aja.
While Bali has reopened its borders for foreign tourists since October, they're still not coming in. Many international airlines are yet to reinstate their direct flight to the island. Balinese people here really hope they can see more people from Australia, China, and Europe to come visit next year.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
It's a great question.
Great question.
Great question.
Great question.
Great question.
That's going to be the best question I get all night.
I'm glad you asked that.
Bloomberg Television. Top experts. Great questions. Wherever you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. Here's what you need to know. Google parent Alphabet comes up short in first quarter revenue, while Microsoft does better than expected thanks to the cloud. We'll hear from Facebook parent Meta after the bell. And Twitter has dipped further below Elon Musk's offer price. A bigger loss than expected for Credit Suisse, whose legal bills may keep hurting profits in the coming quarter. The Swiss bank parted ways with 3 more senior executives. Meanwhile, Deutsche Bank raised the outlook for its investment bank after a big quarter for its fixed income traders. The stock, though, very much focused on costs. And it's a major escalation in the standoff between Russia and Europe over energy supplies and the war in Ukraine. Moscow has cut off the flow of natural gas to Poland and to Bulgaria. European gas prices rose as much as 20% in earlier trading. I'm Anna Edwards in London with Kriti Gupta and Katie Lyons, both with me in New York. Matt Miller is off today. And Kriti, the focus really here in Europe is on the geopolitics. The focus in the US very much on the tech earnings season.
Yeah, and it's this kind of divergence that I think perhaps you're seeing a little bit of insulation in the U.S. market right now. This idea that if you actually look at some of these tech earning makeups and simply the issues that you're going to be seeing where that weakness in those tech earnings are, well, it's not here in the States, it's actually abroad. Google, for example, Alphabet talking about that European ad weakness, that's going to all show up in futures. And that's really where you're seeing 0.9% this rebound, because at the end of the day, if you look at the regional exposure of some of these big tech companies, over half of their revenue still comes from right here in the United States. So I wonder how much of that is feeding into the sentiment. 10-year yield, of course, following the futures lead up to about 4 basis points. Crude, Bitcoin, both higher on the day. It shows you there's a little bit of a risk-off tone in commodities to match the risk-off or risk-on tone, excuse me, that you're seeing in futures and in yields as well, Kaylee.
Well, you talked about how the big tech earnings are feeding through on the macro kind of larger scale picture. Let's look at the individual moves, though, before the bell, Kriti. Of course, Microsoft was the one who performed better after the bell yesterday, really thanks to cloud growth. That in particular really what driving the beats for the company. That stock is up 5.5% as a result of that. But of course, different story for Alphabet. Kriti was talking about the weakness in European ad sales. You also had weakness for YouTube. Part of that is the fact that all the young kids are on TikTok, and that is eating to YouTube. But then also, of course, you had those Apple privacy rule changes, which make it harder to target advertising. So Alphabet is down about 2.5%. And of course, all of those headwinds on the advertising front don't bode well for other advertising-reliant social media companies. The likes of Meta, the parent company of Facebook, which will be reporting after the bell today. It's down 2% in early hours ahead of that. And of course, Twitter will be reporting tomorrow, Anna, but we continue to monitor not just the earnings story, but the fact that there will be no conference call because Elon Musk is buying the company for $54.20 a share. It is trading pretty significantly below that, about $5 below that this morning, right around 49 before the bell, Anna.
Yeah, perhaps a little bit of execution risk still being priced in there on that price. Let us focus on what's going on here in Europe then, and European equity markets recovering from some of their earlier nervousness. We saw selling in the early part of the trading day, very much associated with what we'd heard from Russia. Russia confirming this morning they'd cut off those gas supplies to Poland and to Bulgaria, and that raises the question of where in Europe is next. We've heard from Russia this morning talking about payment for gas, more on that in a moment. European natural gas prices then had jumped on that news, up by 20% at the start of trade. They were up by 11% in yesterday's session, so moving back towards those elevated levels that we saw last year. We've paired those gains now a little bit, but it still remains a real focus for European investors. Mercedes-Benz, back to the earnings story, that stock up by more than 3%, and this company really focusing on their ability to price. They were talking about what's going on in pricing power and the way that they can pivot towards more expensive vehicles, essentially. And Deutsche Bank down by 6% this morning on the back of their numbers and the focus on costs. On the Russian asset front, this is what we see on the Russian ruble right now, and we have heard from Russia that they want, of course, to see payments for gas in rubles, and that's where all the tension lies around this gas story, Kaylee. The Europeans still don't want to, although we heard from Russia this morning that 4 European energy companies have apparently, according to the Russians at least, we'll look for confirmation of this, have paid in rubles.
Yep, a story we will continue to monitor. Just as, Anna, here in the United States, we will continue to monitor big tech earnings. Of course, you had Alphabet and Microsoft, as I said, both reporting after the bell yesterday with mixed results. But there's going to be more coming up. We have Meta that will report after the bell today. Twitter's coming tomorrow, as well as the likes of Amazon and Apple, the other huge heavyweights within this market. Joining us now to discuss is Rob Nyes, a founding partner at Hoxton Ventures. He also is a former Google product manager. So Rob, let's start with Google and these advertising headwinds that Alphabet is facing, not just when it comes to Google search, YouTube as well. What is your reaction?
No, it's pretty disappointing. I think if you think about the pie of online ad spending, it's clear that TikTok is taking a bigger and bigger piece of that pie now every quarter, and Google's seeing it in the earnings. I mean, it was disappointing to see YouTube, come in below expectations. That was quite a big surprise given the overall, importance of YouTube. But I think they're getting hit on all angles. They're getting hit with European and U.S. inflation numbers, where consumers are perhaps spending less and driving ad yields down. It's not a great place to be right now.
Okay, good to see you, Rob. Can I ask you about what we learned from the Alphabet story, what we learned from the Microsoft story, that could be instrumental in thinking about Alphabet and Google? One of our colleagues making the point that Microsoft really, shining on cloud and just highlighting how little advancements we've seen from Google on that front.
Yeah, I mean, it's a tale of two stories. I think Microsoft is hit on all cylinders. If you look at every part of the business, it met or exceeded targets, and cloud is performing really well for them. Google, is hanging on and is still growing, albeit slower than they would like. I think Google is still committed to that, very long term. So you're going to see them continuing to invest in cloud and, fight their way in. But for now, it's Microsoft and Amazon that really have the lead, and Google's still third place and trying to catch up with not much success so far. You'll see they also announced they're increasing R&D spending by $1 billion. So, to me, that's, continuing to double down on the product and double down on the work. But they still haven't gotten the sales up to the level the level their peers are at.
Rob, it's that doubling down that I really want to emphasize here. Both Alphabet, both Microsoft, boasting quite a bit of cash on their balance sheets. Where should they be spending that money to really ensure that they can be competitive in, say, the next 10 years?
Yeah, I think like with everything in tech, it's R&D. R&D is what really matters and makes these platforms more differentiated. Right now, they're all fairly commoditized to an extent among the enterprise cloud products. But I think Google's making the right move with a $1 billion increase in R&D. Microsoft and Amazon both are doing the same. And then Google's, of course, doing a large buyback, which again shows maybe less confidence on the long-term advertising markets or the near-term advertising markets. So the buyback is interesting that it's such a big buyback, $70 billion. But it is reassuring to hear $1 billion more on R&D, that they are thinking about the right innovations that'll drive the growth.
Yeah, on the point of buybacks, Rob, one of our analysts here at Bloomberg Intelligence told me yesterday that's kind of, other than R&D, the only really place they can put cash to work, because acquisitions are very, very hard in this regulatory environment here in the U.S. While we're talking about how flush with cash these companies are, though, how recession resistant are they? What are we learning about the business models, where their revenue reliance is, like on the advertising front, for example, as we also talk about a slowing global economy?
Yeah, I mean, I think, if you look at their composition of customers, Microsoft is clearly far more exposed to business than consumer. Google's a bit more mixed between consumer and B2B both, and clearly Google's trying to double down on the B2B side of things. So I think in a recessionary environment, clearly consumer spending is often a leading indicator. So that's where Google and Meta and the others will be potentially hit first. Microsoft, again, at some point, if we do go into a recession, business spending will go down. The question is, how much of that spending is able to be taken down once you've moved your business into the cloud or once you've moved your products into Azure or Google Cloud. It's a bit hard to take your spending down. So I think, in a tougher environment, people do have enough reliance on their technology. They don't really have room to cut what they spend on the cloud. So people will try and economize, but I think these businesses will probably all outperform.
Do you get any clues, Rob, so far on the state of the US consumer, or would that be to read too much into some of these tech earnings? People ask themselves that question after Netflix, but maybe it was something very much more about competition from other players in the real world going on there. But what do you see in terms of the US consumer?
I think things are fairly flat from what we've seen in the numbers that we look at. I think there's still a lot of questions around the economy and how will it perform later this year. And I think the ad dollars right now is simply a fact that the pie is staying about what it is. That pie is not growing too much, so people are fighting over different shares of the pie, and that's where TikTok entering the picture really starts to cut into YouTube, because that's a one-to-one competitor. And if you're allocating ad spend, you're increasingly putting money toward TikTok that you otherwise might have put in YouTube. So I think it's win or loser, and in that case, Meta and Google are probably the ones that are hurt more by TikTok directly.
Rob, thanks very much for joining us. Rob Nyes, founding partner at Hoxton Ventures, giving us his thoughts on tech. Coming up, Freya Beamish, head of macro research at TS Lombard. What does she make of tech? What does she think about what we're seeing in China and the growth story there? This is Bloomberg.
Lots happening on Wall Street.
It's the basic law of economics.
It validated what the market was already pricing.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
Good morning, traders. How are you doing today? I'm going to place an order to buy a euro. The price I'm looking to buy, actually, it's not far from here, 106.10. Okay, so if you're looking to trade euro today, please place your order at 106.10. And stay with me, we will close this trade in profit together. Okay, if you want to get the strategy, you need to go to companyeye.co.uk. Otherwise, you can copy this trade for free. Okay, I'll speak to you later, guys.
COVID, including lockdowns in China, and naturally high energy prices that actually existed prior to the war effects. All of those, I think, are having an impact on the economy and business confidence. And we also stand in front of what will be a relatively historic rate rise cycle that's beginning in the United States.
That was the Deutsche Bank CFO, James von Moltke, speaking earlier on Bloomberg about threats to the global economy. Let's pick up on that theme with Freya Beamish, head of macro research at TS Lombard. And Freya, the threat to the global economy that jumps out to us from the news flow this morning is all around Europe, and the threat from Russia to stop sending, or the reality that they've stopped sending gas to Poland and to Bulgaria. And now people ask, well, where will that go next? What kind of downside to the European economy would we see if we did see Russia stop sending gas?
Well, I think what we did was to take quite a simple approach, was just to do a series of kind of back-of-the-envelope calculations and realize that overall, so far, the hit to growth is probably about 5% of GDP, and the mitigating factors are probably about 2.5%. So while we start at the beginning of the year in the high threes for growth, we're now in the low twos, which is the so-called worst-case scenario currently for the ECB, but that looks like almost the top end of our range. And it's really a factor of...
Sorry guys, as you can see it moved off, so let's cancel be in and keep an eye on this pair because it's moved by a price. Okay guys, please cancel this order and let's see what's going to happen next.
Against it and try and stay on that hawkish bandwagon and avoid further euro depreciation, which embeds inflation, which is what they really don't want. But growth is just not going to hold up. And by the time we get to Q4, that'll be clear.
So a situation, as I outlined, Freya, could lead to rationing of energy products around Europe. You still see a situation where that would allow there to be growth in the Eurozone, though?
So the 2% this year implies 0% quarter on quarter all the way through the year. There's a massive carryover effect in the year-on-year terms, full year-on-year terms this year, just because of the craziness of the base effects. So we actually think that there might not be a technical recession, but there could be negative quarters of growth. Q2 is going to be very weak globally. And Q4 is going to be very weak in the euro area as well, and maybe you get some positive quarter coming through in Q3 just because of release of pent-up demand. But that all kind of is before you even factor in the slowdown in China, which could become a much more serious thing.
Okay, Freya, well, let's talk about China. You had Xi Jinping overnight talking up infrastructure spending, really trying to bolster the economy. How much can that work if COVID-0 is still the policy?
Yeah, it's very difficult for China to get growth this year, largely because China doesn't grow unless there's a further greater liquidity growth. And there's a 3-quarter lag between that liquidity growth picking up and nominal GDP actually picking up. So the trend in nominal GDP growth is not going to pick up until around the end of this year, but unfortunately the deflator is still going higher. And so when you clock up all the numbers together, it's very hard to get growth in reality above kind of 4%, probably 3%, and depending on how much of the infrastructure they're successful in pumping out, then it could be even lower than that at points. So it's clear why they are acting in this way and trying to bolster growth. And they'll never print below 5% because their target is around 5.5%, but the reality is going to be much weaker.
So Freya, what does that mean for fund flows, for capital flows in particular? If you start to see a lot of this weakening growth, as you point out, in China and potentially Europe and arguably the read-through into the United States as well, where does the money go? Does it come into the United States or does it stay in these regional hubs?
I think your point is a good one, because essentially when I talk about that 3-quarter lag, when liquidity growth does eventually pick up, there's nowhere for it to go in the domestic economy. It's seemingly for about 3 quarters. So you get these capital outflows, and that's exactly what happened in 2015. And we're looking at probably a similar situation for the renminbi now, except that China is much more leveraged and in a much more difficult position on a structural basis. So it probably does come to the US, and it probably does come to developed markets, because EMs are kind of caught in this pincer movement as well between the hiking of the Fed and the slowdown in China. But that also speaks to the kind of longer term trends that there is a deglobalization effect And China, unfortunately, can't rely on the path that was taken by Japan and Korea when they kind of hit their debt wall, which was to effectively devalue and rely on demand from the rest of the world. China's simply too big to do that, and it's politically impossible for them to do that.
Well, one of the other concerns when it comes to China is simply how much they can continue to export in light of those COVID lockdowns, as Kaylee mentioned before. But I'm curious what that means for the export picture and consequently the currency picture for some of these other major companies. Japanese exports, for example, can they ramp up in the face of a weakening yen? American exports in terms of making up the gap from Ukraine and Russia, even in the face of a strengthening dollar. Can you square the two for us?
I think, yeah, broadly speaking, we do see this kind of trend of reshoring because the renminbi is so overvalued and probably has been overvalued since as long as 2011, 2012. And actually, we did start to see evidence of that in terms of PPI, inflation going to deflation in 2012. And this is when you see the big ramp up in debt to GDP in China as well. And also in the US, we saw kind of structural changes coming through in terms of the labor share of income starting to rise again, which is an indication that there is overvaluation of labor in China. So we do see reshoring of the kind of high value added products to the US and the lower value added within the EM space, but again bearing in mind that kind of globalization trend seems now to be reversing.
Freya, thank you so much. Thanks for your analysis. Freya Beamish there, head of macro research at TS Lombard. More early edition still ahead. This is Bloomberg.
Delhi airport, and behind me you can see SpiceJet 737 MAX aircraft. SpiceJet Chairman Ajay Singh earlier today said that Boeing is going to compensate SpiceJet in form of cash and aircraft. Celebration happening at the Gwalior airport. As you can see, they've literally rolled down the red carpet for SpiceJet Chairman Ajay Singh. There are balloons, there are flowers. This is a big deal for SpiceJet because it is the only Indian operator of Boeing 737 MAX planes currently.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
This is a market that, over the past few weeks, has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This is Bloomberg Surveillance Early Edition. I'm Kriti Gupta with Kaylee Lyons in New York and Anna Edwards in London. Matt Miller is off today. Tom Keene, co-anchor of Bloomberg Surveillance, joins us now with his single best chart today. Tom, what do you got?
The single best chart, it's the ugliest chart out there, Kriti. It's the one with too many lines, too many colors. I do this once every 90 days. Here it is, folks. This is from the pandemic beginning and the big mega caps. Apple in red, how cute. Microsoft in blue, Amazon in that ugly orange, and Google I threw in yellow, SPX is in white. And on the chart here, it's a jumble, but what it says is a stark outperformance of Apple. The others, particularly Amazon, challenged, but you know what? They've outperformed the Standard & Poor's 500.
Yeah, all tech not created equal then, Tom, and we're dissecting the tech sector this week. Who have you got appearing on your show to help you do that?
We've got a number of people. John Farrow will be with us today to talk about the euro. We're looking forward to talking to Mr. Farrow about a euro printing a 105. But very importantly, and timed for the gossip of Elon Musk, the engineer from Detroit, Mary Barra, will join us, and this will be a spirited conversation about the rule book she has to live with every day. I don't believe she's got a margin call due on General Motors shares, but we'll talk to her about all going on with GM and also the auto industry as Mr. Musk knows it.
Really looking forward to that one. GM definitely performing a little bit better than Tesla in recent days, Tom. Tom Keene, co-anchor of Bloomberg Surveillance, thank you very much. Now, in addition to that interview with Mary Barra, here's what else we're going to be watching today. I personally, talking of big tech, will be watching Meta results after the bell. Remember February when Meta reported, Kriti? It was really ugly because they gave such a weak sales forecast. And in hindsight, with the results we got from Alphabet, the talk of weak advertising trends when it comes to YouTube, when it comes to Europe, when it comes to those privacy changes on Apple devices, none of that spells good things for the parent company of Facebook. So it'll be interesting to see how long management says some of these headwinds they face will be with them. The stock is down about 2% in pre-market in anticipation of these results. Also, Kriti, I gotta be honest, I still need someone to really explain to me the vision for the metaverse because I'm just not there yet.
Yeah, I'm with you. But, you know, if you are Microsoft, for example, your vision of the metaverse is going to be working from home, the remote working as opposed to a social network. What's great about tech stocks is simply the idea that they're not dependent on things like inventories or supply chains as much as some of the other companies are. And that really brings me to what I'm watching. Wholesale inventories coming up at 8:30 a.m. this morning. Interesting to see how a lot of corporate America is positioned in the face of some of these supply chain issues. And I should say in the face of this potential Beijing lockdown, given the impact on simply exports coming out of China, Anna.
Does the metaverse mean the three of us all appearing, well, putting on headsets from wherever we are in the world and then sort of virtual us all present the show together? At least I could be in the same place as you in some sort of virtual existence. There we go. We'll try that one day. On more serious matters, I'm watching Russian gas and where it's heading and where it's not in particular, because we have seen such a step change in Russian policy toward Europe. The flow through the whole Ukraine war, the flow of gas had kept coming to Europe. And then we saw the Russians say they wanted it paid for in rubles, and the Europeans don't want to pay for it in rubles. And so as a result, there is now this standoff. It's come to Poland and it's come to Bulgaria sooner, and that cutoff has already happened as of this morning. And the reason it's come to them is because their payments were due sooner. Poland and Bulgaria say they have taken action, in particular Poland, to try and insulate themselves from this. Their contract with Russia in the Polish case was coming to an end at the end of this year, but it really raises questions about where this goes next, about whether other parts of Europe, Kaylee, are targeted in the same way. And there our attention goes to Germany and to Italy. And this could be something that once again will play into, well, the geopolitics of this, but then into inflation as well.
Absolutely. I mean, for Germany, they've been so reluctant to actually put an embargo on Russian fossil fuels because of the implications for the economy. The likes of the Bundesbank saying it will mean German growth retracts by 2% this year. But it's not necessarily Germany's choice entirely, Anna. If Russia does decide to cut off that gas flow, we're talking about a recession in all reality.
Yeah, absolutely, we could be, and that's what we were discussing with Freya Beamish a little bit earlier on, just how weak does the European growth story get if that is where we end up. We are not there yet, but certainly something we're monitoring. That is it for the early edition. Surveillance is ahead with Tom and John and Lisa. They'll be talking about the weakness in the euro that story has produced. This is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
But ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
Growth does drive inflation when it's demand side led.
I think that's what we're seeing is Fed officials trying to find where that restrictive point is.
This very pessimistic sentiment environment does provide some support for the market here.
Companies are in a really good place. Balance sheets are strong.
There's still quite a bit of momentum in the U.S. economy.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Live from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance on TV and radio alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Farrow. Futures bouncing back on the S&P by 1%. The euro, the epicenter of TK's world right now, weaker, Tom Keene, for a fifth straight session.
It is the deepest market, John. I'm not going to mince words. It's a cliche. The limit, John, this goes back to Gilbert Chemsets. You're too young to remember when your father put you in a bomb factory in the basement with a Gilbert Chemset, but there was a thing called litmus paper where you take the little paper and you put it in a little bottle and it changes color, and then you go watch Woody Woodpecker. Well, the answer is today we're looking at the litmus paper in the system, and it's foreign exchange, and it's a euro printing a 105 handle.
With zero confidence for the outlook in Europe right now, Tom, and the latest news this morning overnight, Russia restricting gas supplies to Poland and Bulgaria. Who's next?
Well, who's next is the right answer, and I don't know what it does to Poland and Bulgaria. We're going to learn about that through surveillance this morning. But, John, I'm going to suggest it's a set of events, and I really got to go to the reset and recalculation from the Gloomhouse, Deutsche Bank, where they just simply say, look, this is where we're heading, given this cacophony of events, and that heading is a recession.
Elisa, what we do know is it's sending gas prices higher.
It's setting gas prices higher, although they are down from some of their highs. My issue is how much are we already seeing capitulation? There was a story on the Bloomberg this morning saying that 4 payers have actually made payments to Russia in rubles. But really the story here is that Vladimir Putin is weaponizing gas supplies for the first time in an escalation that we haven't seen.
That's the European situation. We've got to talk about the earnings too. The Nasdaq yesterday had an ugly, ugly close. On the month for April now, it's down 12%. On the year, Tom, the Nasdaq 100 is down 20 full percentage points. That one has been messy.
Every company's a different story, but you're right, John. At the end of the day, you got to conflate them all together. And what I would suggest we saw yesterday, particularly with Google, is the idea of use of cash to the rescue, and we'll see how far that goes. Share buybacks, dividend increases, and the rest of it. I mean, what does that do about little slippages? Remember, Google just slipped a little bit. I'm going to say on YouTube, what do I know? But the answer is there are these sum of events that all lead to a lesser NASDAQ. That was ugly at the close.
And that stock is down 2.6%. Alphabet lower in the pre-market. Lisa, Meta coming up a little bit later.
And it'll be interesting, especially with the advertising and the European advertising, considering that was a real hit to Alphabet or Google's bottom line. But also the fact that people are not joining the site. It sort of has a demographics problem. I'll just leave it at that.
Oh, you think? There's an older cohort that are still on Meta?
Yeah,
calling it Facebook.
We're going to talk about Facebook and how
cannot wait.
Grandmothers are posting pictures of their grandchildren,
and
which is lovely.
Too,
we
which is a
appreciate it.
beautiful thing. And we can get some insight on that exclusively here on Bloomberg Surveillance a little bit later.
I'm sure we can.
Futures on the Nasdaq bouncing back. We're up by a little more than 1%. On the S&P 500, up by 1.04%. Yields were lower for 3 straight sessions into today. They're higher now by 5 basis points to 277.23. Crude higher as well, up by 0.8%, 102.57. And there's the euro weakness very briefly, Lisa, with a 105 handle, getting back to 106.18.
And it has been the weakest going back to 2017 this morning, which is a reason why possibly one of the most important events of the day is European Union Gas Coordination Group members joining forces and trying to come up with some coordinated response to the escalation that they saw out of Russia. How do they deal with the fact that Russia is demanding rubles at a time when they do not want to pay rubles because that edifies a currency of a country that's been increasingly isolated in the war that they are waging in Ukraine? We did see a tick up in natural gas over in Europe. It's come down from the highs overnight. And John, I think this is interesting because to me it suggests that people do think that there either will be capitulation or that it won't come to that Russia will not cut off these supplies. However, the 20% gain in prices shows you what the potential consequences could be if they're wrong. At 10 a.m. we get U.S. March pending home sales. This I'm actually particularly interested in. How much do they decline? How much do they come off some of the high levels that we've seen as we see prices continue to climb? Yesterday we got that home price index and we got it climbing at the most going back decades, even as we get mortgage rates at the highest level since 2010. At what point do sales have to slow to foretell perhaps a little bit more cooling in some of the prices? And aftermarket, this week, just to put it in perspective, 177 S&P companies are reporting earnings. It is the busiest week of earnings. Meta after the bell, really a focus on advertising, Meta, Facebook, especially after Google reported earnings after the bell that really disappointed on that front. YouTube revenues, YouTube advertising, as well as European advertising. How exposed are some of these nations? Meanwhile, the other behemoths like Microsoft still crushing it, particularly with the cloud.
Lisa, thank you. Amazon and Apple coming up tomorrow. Looking forward to that. TK, the bias at the moment is just to pay attention to the weak prints. The weak earnings reports. Visa was good. The airlines have been great. I'm thinking back to last week, the past week, United, American, Delta. The likes of GM, you'll catch up with Mary Barra a little bit later this morning. They were decent numbers too.
Yeah, I got to ask her about the electric company known as Tesla. John, here's the reality. When I'm focused on radio, I got my cell phone with me looking at the Bloomberg app. This is the log-on Bloomberg app, world famous. And John, when I got a margin call on the triple leveraged all cash fund, this is what I turn to. You know, I'm at some sports event or whatever with Afterthought, and I'm looking here to see how much you're going to pony up. Do you think Elon Musk is looking at his Bloomberg terminal cell phone thingy today, trying to figure out where the margin call will be?
I'm not going to guess what Elon Musk is doing. He's a smarter man than me. I'll guess what the market's doing because I can see that shining brightly on the screen. Twitter's trading at 48, Tom. The offer price is 54.20. There's clearly a gap opening up, isn't there? In the wrong way.
Yeah, there's a gap opening, but it's a movable part, and there's different numbers there. I've seen a number as high as $700 a share on Tesla as a margin call, John. I've seen numbers down at the 500 level as well. I really don't know where that number is today, but boy, did he get partly there rapidly.
There's about $5.30 worth of doubt in the equity market, Lisa.
Yeah. Honestly, whether this deal will actually get done, let alone what the potential consequences could be for Tesla, John.
Looking forward to that conversation a little bit later. Seb Galley joins us now, senior macro strategist at Nordea Asset Management. Seb, weakness of the euro. The weakest going back to 2017. I remember back in 2016-17 when we saw a 103 handle, 105 briefly on euro dollar earlier this morning. Seb, your thoughts on what's going on here?
Well, it's an interesting configuration. You have the dollar strength, which creates momentum, the appeal of the dollar as a safe haven, so it continues. The cluelessness of the currency market, which doesn't know how to trade. Rate differentials is really small between the Eurozone and the U.S. Eventually might get bigger. And then the big shock is really this conflict in Ukraine, which probably will last quite a few months, and we might get wilder and wilder moves. We're starting to see that from the Russians as they probably get defeated. They don't have the logistic, they don't have the production. The Ukrainians and the West is playing a long-term game that the Russians cannot fight, and that is actually negative for the euro and the eurozone, I guess, in the medium term. And you're starting to see that being priced in now through a weaker euro dollar, to which the ECB eventually is going to have to react.
Seb, where does euro break? I mean, I can't get a straight answer from anybody. Is it 105? Is it 104? Is it parity? On weak euro, where do things unravel?
Well, you have charts are lines in the sand to reassure yourself they are completely meaningless. So for a chartist or somebody who's in the market, 105 is what you're looking at. If you are somebody who actually trades and invests, you're looking at parity because you think it's a psychological level. But the reality is it doesn't matter very much. The euro is extremely weak. The ECB has to react to it. And one of the reasons it has to react to it is because we have a conflict between NATO as a proxy war with Russia. Negative interest rates are a way to reduce the value of your currency. I sat in the meetings in the ECB regarding this, and that means they have to move out of negative to zero very quickly, and that should happen in July.
Sebastian, I was looking at the dollar index, the DXY index. That's the strongest going back to March of 2020 during the hysteria that we saw amid the pandemic, but reaching the highest levels that it's been in years. At what point does something break?
It's a good question. I think the question you should ask yourself is where can I find safety in the world? Is it in the back end of the US Treasury curve, or is it in the dollar? And the answer is a combination of both, but the dollar is a safer one that creates a momentum, which of course creates a shock to the US economy, but also helps it to manage inflation. It means that oil prices in dollar terms are somewhat lower, other commodities are easier, and it's not as bad for the Fed in terms of its rate hiking cycle. Having said that, it probably needs to be very aggressive to control the narrative on the other side. And if you compare that to the Europeans, which have a weak currency policy, there is essentially too much inflation and they really need to do something about it.
Seb, great to catch up, buddy. As always, Sebastian Galli there of Nordea Asset Management. We just don't have any confidence about the future. In fact, that confidence is lower, not higher, as this year progresses. And Tom, I would suggest that we need to get through the next couple of rate hikes from this Federal Reserve. If it's 50, then it's 50, then work out what the future is. And Mark Cabana of Bank of America is going with that. He's saying the Fed is likely to shift from a source of volatility to one of more stability over the coming months. A more certain Fed, he says, should help lower rates vol and provide confidence to the market.
Given the original territory we're on, John, and it's not a cliche, this is original. It's wildly nonlinear. The first 25, the first 50, dare I say 75, will be just noise. And then it's after that, and then after that. And I go out, I'm going to get it up here, John. Sorry, I'm looking at my margin call on Tesla. Excuse me. I'm going to go out on the date calendar to, what, July 27, even September 21, where that B of A idea slams in with a vengeance.
And at the same time, Lisa, what you'll get as we deliver, 100 basis points of hikes across 2 meetings is a deceleration in inflation, because we're seeing a peak, a mechanical peak, a so-called mechanical peak in CPI in America. Then to the back end of summer, things start to get a little bit more interesting for the future.
And the hope is that inflation will roll over enough to give Fed a little bit more comfort, Fed members a little bit more comfort, so that they don't have to torpedo the economy. My concern listening to the earnings reports is the fact that this is a supply shortage. This is a goods shortage. So even though you are seeing prices go up, people need those goods, and that's going to be a problem for inflation.
Chairman Powell, I'd argue, right now has got an easy job, hike rates. President Lagarde at the ECB has got a much, much tougher job. Euro dollar 106.10, we're negative 0.25%. From New York with Tom Keene, Lisa Bravitz, I'm Jonathan Ferro. This is Bloomberg.
Keeping you up to date with news from around the world. With the first word, I'm Lisa Mateo. It's a major escalation in the standoff between Russia and Europe over energy supplies and the war in Ukraine. Moscow will cut off the flow of natural gas to Poland and Bulgaria. It's making good on a threat to halt gas flows to countries that refuse the new demand to pay for the fuel in rubles. European gas prices rose more than 20%. China's President Xi Jinping is calling for an all-out effort to boost infrastructure construction. It's Beijing's latest attempt to rescue economic growth, but the strategy may prove less effective this time around because of lockdowns being used to get the coronavirus under control.
The world's richest person can't afford to take too many days like Tuesday. Elon Musk's stake in Tesla plunged by more than $32 billion. Investors assessed his deal to buy Twitter and gave their verdict by sending shares of Tesla down 12%. Musk has pledged some of his Tesla stake to secure the Twitter deal. The Senate has voted to confirm Lael Brainerd as vice chair of the Federal Reserve. The vote was 52 to 43. Most Republicans oppose Brainerd because of her views on regulation. Meanwhile, a combination of COVID-related absences and a political spat threatens to delay 3 other Fed nominees. And Norway is tops when it comes to normalizing the life alongside coronavirus, while Hong Kong and mainland China are among the worst. That's according to the Bloomberg COVID Resilience Ranking for April. Norway is followed by Ireland and the UAE for places where the pandemic is being handled best. The U.S., well, fell 6 spots to number 23. The U.K. is down 2 spots to number 12, both due to the number of fatalities. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Lisa Mateo. This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Everyone you meet in Port Harcourt has stories about what they call black soot, caused by the manufacturing and consumption of these fuel products in the illegal refineries.
Oil theft, known as bunkering, and the refining of its spoils is worsening the damage from decades of fossil fuel exploitation, creating one of the world's most severe ecological disasters.
Our sacred forests, our homes, have to give way to oil wells, and no one gets much benefit.
Imagine a resident of Port Harcourt who inhales this soot every second in 24 hours, 7 days a week, 30 days in the month, and for years now, we are dying slowly but surely, and our lifespan is reducing every day.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com webinars.
He's here.
A moment of multiple crises.
Bloomberg is fastest with the numbers and analysis.
You do have some good news and bad news.
It's a good time to own volatility.
Bloomberg, the fastest numbers and analysis you trust.
We do want to make it harder for Russia to threaten its neighbors and leave them less able to do that. They are, in fact, in terms of military capability, weaker than when it started. We would like to make sure, again, that they don't have the same type of capability to bully their neighbors that we saw at the outset of this conflict.
That was Lloyd Austin, the U.S. Secretary of Defense from New York City this morning. Good morning. Futures are positive, deeply negative at the close yesterday on the S&P 500 and on the NASDAQ too. On the NASDAQ this morning, we bounced back big time, up by more than 1% on the S&P 500, a similar move. Yields higher too, that classic risk-off, risk-on story over the last 24 hours. Yields up by 5 basis points on 10s, 277 on 2s, up 6 or 7 to 257. Euro dollar 106.07, just about holding on to 106 again after having a little look at 105 earlier this morning. Tom, the latest out of Europe, obviously, everyone up to speed now. Russia restricting gas supplies to both Poland and Bulgaria.
You know, you got a problem, John, when we have a headline moments ago from the gas people in Finland that they are seeing normal gas flow. I guess that's how fragile it is when you have to put out a headline saying things are normal. It is not normal in Washington. Anne-Marie Horton joins us now, our chief Washington correspondent. Anne-Marie, it is not January. It is not the depths of February cold. Is the White House response to no gas to Poland and Bulgaria different because the tulips are out than it would be in the winter?
Well, it does make it easier, right? Because you don't have the same needs for natural gas right now than you do in the freezing cold. We should look back at history. This happened twice before, in 2006 and 2009, where there was some feud between Russia and Ukraine on gas supplies, and you did have a shortness of natural gas supplies. What happened is countries like Slovakia had to end up turning off the taps for factories, telling people to use less, and you saw demand destruction. Poland right now has the weather on their side, and for the fact that they've been building up stockpiles. At the moment, Poland is absolutely okay. The issue is, now that you see President Vladimir Putin making good on his threat, who is next? That's the worry right now for Europe.
If I may change gears, and this was the foreign affairs people with us yesterday on their magnificent new issue led by Robert Kagan. There's an opposing internationalist view, Anne-Marie Horton. It's a gentleman from Kentucky, Mr. Paul, saying with sharp criticism, the U.S. got us into this mess. How lonely is Senator Paul, or is there a constituency that agrees with him?
I know exactly the comment you're talking about. He's saying the fact that the U.S. was backing Ukraine on joining NATO, or at least keeping the open door policy, created an environment for this. But the issue comes down to the fact that this was also in Ukraine's constitution, right? And the United States wasn't very much so saying, yes, we are going to let Ukraine in, but they just said we are going to maintain the NATO's open door policy. And it's not for the United States alone to decide that. I would say it was an interesting comment from the senator, and he's not that lonely, but it is certainly not the majority. You have the likes of Senator Romney yesterday at that same hearing saying to Secretary Blinken that after the chaotic withdrawal of Afghanistan, that now credit should be given to this administration for all the work they've done. But it is an interesting nuance and a point to bring up, because when you listen to the Russian rhetoric, especially Sergei Lavrov this week said they are already in a proxy war with NATO.
Anne-Marie, how much is the Ukraine war still dominating the conversation in Washington instead of perhaps the impending weakness in the U.S. economy or even Twitter?
It's still a big part. I think part of that is, Lisa, but the fact that they're trying to get another spending package through, right? The president's drawdown orders, that money he has left from that Congress gave him, is really starting to dry up. So they're going to need more money. So that is why this is a big issue on Capitol Hill. It's also an issue where you see a ton of bipartisan support. So it's very simple for senators to want to get together and lawmakers and try to push another package through, because this is something that they can tout because they can actually get it over the finish line. When you're looking at other issues, it's going to be very problematic.
Well, and those other issues, Anne Marie, and the reason why I pointed in particular to the economy is because there are an increasing number of reports that are saying that basically Democrats are dead in the water when it comes to the midterms, simply because you're going to get inflation that still is at those incredibly high levels, as well as an economy that's starting to roll over according to a lot of the earnings reports, or at least the projections that we're getting. What is the response to that from the Democratic Party?
Well, we did have reporting this week that Senator Manchin met with Senator Schumer potentially to discuss getting something done before the midterms election, going back to the conversation we've had months ago about using that reconciliation package, and potentially this could be tax hikes or maybe potentially a smaller deal on energy and climate provisions and proposals. The issue you have is this comes back to the issue that's been the entire month, which is even if Senator Manchin can get on board with this and they can move something, we have heard from Kirsten Sinema, the senator from Arizona, in the past saying she's not on board with raising tax hikes. But this could potentially be something. And Senator Manchin says it is important because they believe this is a way to fight inflation.
Anne-Marie, good to catch up down in Washington, D.C., our Washington correspondent. Someone needs to explain this to me. So Russia has cut off gas supplies to Poland and Bulgaria over ruble payments. And then we're reporting, according to a person close to Gazprom, that 10 European buyers have opened ruble accounts, and 4 European gas buyers have made ruble payments already to Russia. Bramo, I'm not clear on what's going on with the Russian gas situation to the Europeans in any way, shape or form.
Well, Ursula von der Leyen basically called it blackmail by Russia. Is the blackmail working? That is really the issue that I see when you talk about who's actually paying for gas in rubles to comply with Russia's demands that they don't get their gas supplies cut off. Is Russia basically saying, we're going to wield our sword. We're going to show you what we can do if you don't do this. And just look at Poland, look at Bulgaria as examples.
We're thinking about the who's next. The next payment, second half of May. Is that right, Lisa?
I believe so. And honestly, how many have already gotten ahead of this, but done so in quiet, that are now going to be exposed and publicly shamed for doing so? I mean, this is really going to be an interesting issue.
This makes the backdrop for an ECB decision that much harder, Tom. I think this folds in quite nicely, neatly to what's happening with euro-dollar this morning, seeing a 105 handle very briefly. What a tough moment for this European Central Bank. What on earth do they do with interest rates this summer?
Yeah, let's review that for those not attuned to this. They have some form of monetary policy that is coalesced around Christine Lagarde. John, they don't have a cohesive fiscal policy, and part of fiscal policy is support for beleaguered nations with gas and such. It's absolutely, totally different than what we see with the Fed.
5 straight days of euro weakness here, Lisa. Euro-dollar 106.09.
This is not good, right? Remember when a weaker currency was a good thing, especially with the inflationary environment, especially with gas. This is really problematic. And so how does the ECB get ahead of this when it's not just talking about the lack of rate hikes, but also the impending weakness in the euro region?
John, if you want to triangulate this, what you do here, folks, is you have one currency pair, another currency pair, and you find a third currency pair, and that's called a triangulate. John, it doesn't triangulate with Euro Swissy. I do not have safe haven strong Swiss yet.
Coming up, Andrew Sliman's going to weigh in on all of this. Of Morgan Stanley Investment Management. It was clear, Tom. I'm just promoting the next segment where we'll talk about tech earnings and the like. Futures up by 1% on the S&P from New York. This is Bloomberg.
Companies now, they're getting hundreds, maybe even thousands of applications. So software has come in to automate the process.
You want to write your resume for robots, not for humans. The only job your resume has is to be comprehensible to the software that is reading it, because that software or robot is going to decide whether or not a human ever gets their eyes on it.
These things are programmed by a certain segment of the population that might not be totally inclusive or not be fully aware.
Concerns about how this technology could exacerbate discrimination. For the FTC, I think foremost, the FTC needs to be making sure that we're fully understanding this technology.
We don't trust companies to self-regulate when it comes to pollution. We don't trust them to self-regulate when it comes to workplace comp. Why on earth would we trust them to self-regulate AI?
Crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
Futures bouncing back this morning. Good morning on the Nasdaq, on the S&P too. S&P 500 futures up 1%. Nasdaq 100 futures up 0.9%. On the month coming into today, down and down hard. The Nasdaq 100 down 12 percentage points, heading for the biggest monthly drop, going all the way back to 2008. On the year, we are now negative 20%. That's the equity picture. A little bit later, we hear from Facebook. Tomorrow, Amazon, Apple. Earnings very much in focus for that particular index. Elsewhere, looking at the bond market, here are the moves. Just a classic risk-off story yesterday. Yields lower, equities down. Today, equities up, yields higher by 9 basis points at the front end to 257. 5 days ago, though, we were 20 basis points north of this level on a 2-year, pushing 280. So we've corrected lower on 2-year yields at the front end and the long end for that matter, going into the Fed once the quiet period started. That's just something to keep an eye on. The Fed meeting this time next week on May 4th. I want to finish on euro dollar. Alan Ruskin at Deutsche Bank writing a really tidy note yesterday on euro dollar. You'll look at yields in Germany. They are not bouncing in the same way that Treasury yields are here. We can talk more about that later. Euro dollar just briefly with a 105 handle, down for a 5th straight session, 5 days of weakness. And Alan Ruskin at Deutsche Bank saying this: a bird in the hand, rate hikes assured, think the Fed, has gone up in value. A bird in the bush, rate hikes further down the road, has gone down in value because uncertainty has risen. Think the latter of being the ECB. We know what the Fed's going to do up front. We have no idea whether the ECB can deliver. And that for him is weighing on this euro even more so than what's happening with Russia and Ukraine, Tom. Euro dollar 106.90.
Yeah, I'll go with that. I love the Shakespearean stuff there, John. I never was any good at that. You really?
I was terrible too, and I never read the books, Tom.
Yeah, yeah. Well, I did the Cliff Notes, and
so I can't quote them.
Went down in flames. But John, very seriously here, I'm going to also state it's the leadenness of the European experiment. Our idea of 3 or 4% growth is their idea of 1.5 or 2% growth, and that dampens the whole fixed income oscillation.
I'd always suggest, Tom, that what's happening in the euro, we're also starting to see take place with sterling as well. Just this idea that even if the ECB does make a move, they're doing it into weakness. Right. So we've got rate hikes at the Bank of England, and we've got sterling weakness, and the possibility, potential of it happening in Europe, maybe.
Right.
We've got some real euro weakness on our hands. Can you imagine me reading Shakespeare, Tom?
Yeah.
That didn't work out.
Yeah, after the 4th beverage. Joining us now, a gentleman that nailed Shakespeare in school, Andrew Slayman joins us, Senior Portfolio Manager at Morgan Stanley. I love, Andrew, the adult note where you say, do your research, do your homework, and look out for maximum growth scare. What does a maximum growth scare look like?
I think the market will end up near 5,000 at year end, but I suspect that at some point the anxiety around the Fed will lead to a greater scare of recession, and I think we could see the S&P, 3,800 would be down, 20% from the peaks, and I think that's doable the first half of this year. My argument has been this year is a battleground between Fed pivoting a negative and the positives that continuation of good corporate fundamentals. It'll lead to a subpar year, but that's off 4778, which is where we began the year. And when the S&P is down at the 4,000 level, the returns in the year for the rest of the year could be very, very attractive. And I think the low will be on maximum growth scare that the world is ending. And that reminds me very much of 2011, where we had a peak to trough decline of 19%. Fundamentals did not evaporate, and the market came roaring back and was back to an all-time high in 4 months. I think that's the scenario that we're looking at. But right now, we're in the negative side of that. I think it will turn more positive in the second half of the year.
How do you distinguish sectors? I mean, right now we're in the heart of big tech, and they're making big profit. And I understand there's nuances, and they go down X% or that. But how do you take what is 23% of SPX on their way to being 30%? How do you handle them versus the other sectors?
Yeah, I think this is, okay, so this is, I'm kind of shifting my tune here, which is, we bought a number of defensive stocks. Being a long equity manager, I've got to stay invested. We bought a number of defensive areas going into the year. We're underweight tech, but what we see going on is that quality growth stocks, of which many of these tech stocks are, the ones that are earning money, they've been so hammered that I think it's too late to buy the defensives. You have to arrange a list of companies that you think the valuations have come down enough that you're willing to step in if we see further weakness in the market, which I think we will at some point in the next couple months. And these technology stocks, as well as some of these home-related retailers and companies like that, I think they've been hammered so much that those will be the opportunities coming off the rebound the second half of the year, not the defensives.
Andrew, what about the banks? And allow me just to go through the 5-day and year-to-date performance, because it has been dreadful. 5 days, down 6% on JP Morgan, year-to-date down 22%. Citigroup down year-to-date 16.8%, Bank of America down 18 percentage points. Andrew, this is going into a rate hiking cycle. What's going on?
Yeah, well, I would expand, Jonathan, not only that, but I think these regional banks, which are benefiting from a better NIM, I mean, these companies are reporting very good numbers and the stocks are getting hit. So I think it's a story of too much beta, too much risk. The one thing that I don't like about some of the money centers is just their exposure to other parts of the world that are harder to handicap. So my view is to, again, look to add positions in the regionals that are benefiting from Fed raising rates and NIM. But again, I would argue it's a little early. I think you might be a little early. The pain, they've gone down a lot, but I wouldn't bottom fish quite yet. I'd wait for the S&P to be down at that 4,000, 3,800 before I'd step in.
And to be clear,
and my is it was going to come this summer. It seems to be coming sooner than I expected.
So another 9% decline to get to that 3,800 point. Do you think that banks are going to lead it? Is that basically going to be the disproportionate decline?
I think banks, I think tech will lead coming out, but it's not going to lead down to 3,800. There's going to be more pain.
Andrew, one thing that you said that I loved was, I am not a strategist. I have to put money to work, and I wear my mistakes. What has been your biggest mistake, your biggest misperception heading into this year that you've had to reform for the remainder of 2022?
I think the biggest mistake is that I didn't think, just as Jonathan said, I thought that to marry defensives, that's worked, but to stick with the financials because I thought they were going to report very good numbers, which they have, and that has not that's not helped the stocks. The stocks have dropped more than I expected because, again, I thought they would be supported by better earnings, and that's not been the case.
Do corporations adapt to all of this, Andrew? I mean, the one way they adapt is to cut costs. Is that what we don't see out there? Is they're going to come in with a whole new round of cost rationalizations to right-size this?
Well, I think the answer is that I guess one of the reasons why I'm a little bit more optimistic than some is that I'm out there talking to companies and listening to companies, and I don't see the degree of concern that I do at the strategy level, and I'm watching every week the bottom-up consensus estimate for this year continues to go up. And I just want to make sure that's an understood fact because I don't hear that much. Consensus going up. The other thing that I think is important, and I'm getting to your question, is what we're hearing is a number of companies, a couple of industrial companies yesterday, beat in the first quarter, and they didn't raise guidance, not because they saw big weakness coming, but they just were cautious because what's the point of raising guidance at this juncture? So it's possible that if we get through this without a big disaster, you see consensus going up. I think to your point is, it is not unusual in the second or third year coming out of recession to have margins continue to expand. And I think that's what's going on. So I get more comforted when I'm down in the micro talking to companies than when we focus on the macro, the big picture. And so I look and say it's really not been different than we've seen before, which is the third year coming out of recession. Fundamentals continue to be pretty good.
Andrew Sliman at Morgan Stanley Investment Management. Andrew, great to catch up, buddy, as always, as we wrap up earnings through the week. Facebook after the close a little bit later, Tom tomorrow. Amazon and Apple.
Yeah, I think tomorrow's way more important. Facebook's its own story. John, maybe I'm wrong in this, but I do look at Facebook as separate from the others. I'm sure that's a point of debate as well. John, there's just a lot of volatility, and I'm sorry, we've had two once-in-a-lifetime events in the last 3 years. The pandemic and now this horrific war, witness Poland and Bulgaria this morning. I mean, I think Andrew's very measured there about the titanic uncertainty. How do you do a forward view now on a given soda pop company?
And how do you compare now to 2011? I think that's difficult. That's tough, Tom.
I don't.
This time around,
I've never played
the inflation dynamic they're looking at too,
and where the central banks are, and take it as a Taylor rule or some of the other work again, Folkers Landau and Hooper lighten it up as well. I look here, John. Your encyclopedic knowledge is Shakespeare.
Here we go.
And it takes me back to the Tempest and Stefano, and this is 1623. This was first published and. I'm sorry, Stefano just really.
Has you got some of his share?
Said it all. Well, I'm trying to get there. It is. Stefano was long Tesla at the time.
Okay.
So he needed to pay all his debts.
Is that it?
That's it.
Is that the value add?
That's it.
Cool.
That's huge value add.
Thank you, Tom. I grew up in Shakespeare country.
I know you did. You call him Bill.
Country.
Shakespeare country.
Not Shakespeare reading.
No, Shakespeare country is the county of the Shire, Warwickshire.
Oh, Shire.
Yeah. Great Shire.
Yeah. Have you been to Stratford and all that?
Of course. Used to have a restaurant that way, Tom.
Oh,
at 1% on the S&P. On the NASDAQ, up 1% too, from New York. This is Bloomberg.
Always learning something new. Keeping you up to date with news from around the world. With the first word, I'm Lisa Mateo. Natural gas prices in Europe, they jumped more than 20% after Russia made good on a threat to turn energy into a weapon against Ukraine's allies. Moscow has halted gas flows to Poland and Bulgaria, and it will keep the supplies turned off until the two countries agree to the Russian demand to pay for the fuel in rubles. The European Union called the move blackmail. Well, in China, there are signs that authorities are starting to bring two major coronavirus outbreaks under control. Shanghai has hinted that lockdown measures may be eased as infections drop to a 3-week low. In Beijing, the number of cases has stabilized. A new report says that Brexit-related trade barriers have led to a 6% increase in British food prices. Now, inflation for foods that the UK tends to import from the EU, like pork, tomatoes, and jam, was more pronounced than for things like tuna that comes from other nations. That's according to the London School of Economics.
SpaceX has launched 4 astronauts to the International Space Station. It's the first NASA crew equally made up of men and women. It includes the first black woman making a long-term space flight, Jessica Watkins. They'll arrive at the space station 16 hours after launch. SoftBank and its subsidiary ARM are moving to retake control of the chipmaker's China operations. Bloomberg's learned that they will oust its rogue CEO, Alan Wu. Now, ARM China's board fired Wu in 2020 for alleged conflicts of interest, but he had refused to leave. Global News 24-hour day on air and on Bloomberg Quick Take. I'm Lisa Mateo. This is Bloomberg.
What's happening on Wall Street?
It's the basic law of economics.
It validated what the market was already pricing.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management. It's a challenging dynamic.
We could continue to see that kind of strength.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
The Indian city of Jamnagar is a money-making machine for Asia's richest man, Mukesh Ambani. His company Reliance has the world's biggest oil refinery complex here in the city. Jamnagar is also where Ambani is making his newest bet, a $10 billion investment in green energy. His ambition is closely aligned with the Indian government's plan to reach net zero emissions by 2070. But Ambani is not alone. India's second richest man, Gautam Adani, has committed $20 billion of investment over the next decade. But India's massive dependencies on fossil fuels have some environmental advocates questioning the realism and sincerity of those green ambitions and those of its two biggest billionaires.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd